extremely challenging, but there are plans in place to reduce it substantially by replacing it by LNG.
But 5 years? How long does it take?
5 years. It is year by year it will go down. It is with LNG, renewables, in some countries, nuclear power, energy efficiency. Europe is going to reduce the Russian gas because Russia lost entire credibility as a reliable energy partner in Europe and elsewhere.
Fatih, thank you so much for your time today. Fatih Birol there, the International Energy Agency Executive Director. With that, I'm going to hand it back to you in London, Anna.
Francine, thanks very much. Francine, live for us at the World Economic Forum. And our coverage from Davos continues. Don't miss our interview with the Algebris CEO, Davide Serra. That is next. This is Bloomberg.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Welcome back to Bloomberg Markets Europe. 10 minutes until the start of trading here for another week in the European equity markets, and futures point higher. Let's now return to Francine Lacroix, who's at the World Economic Forum in Davos. Fran.
Yeah, thank you so much, Anna. We're joined by the Algebris Chief Executive Officer and Founder, Davide Serra. He is never dull, never boring, so I can't wait to get his thoughts on volatility. Davide, thank you. We're in Davos, no snow. Once we get over that, we focus on the markets. And is it the end of the world like equities tell us?
No, it's not the end of the world. It's just that corporate margins have been rising steadily for almost now 10 years. And with low interest rates, multiple have expanded. And so eventually you got a position, beginning of the year, where I have very high multiple and very high margins. So there's more downside than upside. That's it.
But what does it mean for the consumer? So we had these consumer numbers. I mean, suddenly with inflation at 8–9%, now let's not forget that a lot of people will suffer a famine. But it also means that a lot of people will stop spending as they deal with higher, cost of living crises.
Absolutely. So I think, we've been saying since the fourth quarter of 2020 is a combination of supply shock, basically the planet stalling on renewable resources, clean water, just plain food. As a result, it's happening. We're getting through a massive squeeze on income, which is driven by the real world. It's not the metaverse that is squeezing us. It's just there's no food, no water, no steel, no rare earth. And as a result, we'll see, I think, corporate profits shrinking, and markets' expectation for earnings this year are just too high. Yeah. And so the market needs to find a stable base. We think if you apply a 15, 17 times multiple on $200 of EPS, which is what the S&P posted last year, you get to a base of 3,200, 3,400. That's where I think the S&P is going to land.
Davide, you don't think a recession's coming?
No, I think a recession is coming. The issue is who's going to pay for the recession, meaning in Europe, a recession is coming clearly because of the energy bill. And then it could happen like in COVID, that what happens is the governments basically took the bill because it's the classic one-off. And as a result, in democracy, if you're asking your democracy to foot the bill for a war, you run the risk that eventually democracy says, hey, why should I pay? And so I think in this case, it's better if Europe actually pays the bill and we keep Europe together and we protect the Ukrainian people. And the rest of the world, I think we're already seeing a soft patch. And I think we might go in a technical recession 1-2 quarters. Now, demand remains so strong that I don't think will be permanent.
Right.
Now, a lot of it is driven then by Xi Jinping's decision to be stronger than the virus. But the virus, it's about 3-4 billion years old, and so you should let it run.
All right, you should let it run. A bit controversial, but David, I mean, we're here in Davos, and there's a lot of controversy on whether there should also be a place like somewhere like Davos, given all of the challenges that we're going, little action, so a lot of talk. Do you think? I mean, does this Davos feel different?
Well, it's warmer compared to the. I think the reason why it's different is the mood is a bit sad. Yesterday, for example. Professor Schwab invited those who have been here for about 10 years or more. There's only 100 of us. And to be honest, one of the things said is, how sad and tragic that our Russian partners aren't here. And someone, referred to when Mandela came, and there were the first decision to end the apartheid. So to be honest, it's different because ultimately 3 hours from here, people are dying and shooting each other. And so I think that's why it's different.
But so what should the global elite come together to talk about? I mean, it's not about talk, right? It's a Marshall Plan. It's putting money where it's needed. Where would you put it?
Well, I think right now it's a bit too early because first you need to get a peace. You ain't putting any money till when missiles are flying around. And secondly, now it's how to deal with humanitarian crisis. Yeah. And, remember, more people have been displaced from their homes ever in history in such a short period of time.
Yeah, never forget that. Davide, thank you so much for joining us. Davide Serra there, the Algebris Chief Executive Officer. With that, Anna, I'm going to send it back to you in London.
Francine, thank you very much. Francine Lacroix at the World Economic Forum in Davos. Thanks to Francine for the update there. Mark, we look at these futures heading higher. Also, no doubt, waiting for some comment, digesting the results of the Australian election. Also waiting for some comment, perhaps from China, given what we've heard from Joe Biden on his trip around tariffs, but also around Taiwan.
Yeah, I think that these tariffs news, as I said, some part of the market was focused on this before, but I think the fact that it's been explicitly said by Biden has bringing more attention to a theme that was a little bit under the radar. So I think that's positivity. It's helping Australia. The election seems to have helped the mood there. Some hawkishness from RBNZ is also helping, but all of this is really about the weaker dollar.
Yeah, the weaker dollar, and so the euro gets a bid, even the pound getting a bid, the pound up by 0.7%. So we put that move in the Aussie in that context. Mark, thank you very much for spending the past hour with us. The Open is up next. They'll bring you the start of European equity trading. Of course, futures are pointing higher. We'll bring you plenty more interviews, of course, coming through from Davos. There may not be quite as much snow. I can see some on the tops there, but there may not be quite as much snow as there usually is. But plenty of conversations still to be had from Switzerland. This is Bloomberg.
SpiceJet 737 MAX aircraft. Earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Welcome to the European Market Open. A minute to go until the start of cash equity trading. I'm Tom McKenzie in London with Francine Lacqua joining me from Davos. And here are today's top stories. European and US futures jump. That's after the S&P sidesteps a bear market close. But record COVID cases in Beijing, sour sentiment in Asia. US President Joe Biden says he will intervene if China invades Taiwan. Speaking alongside Japan's Kishida, the two leaders present a united front against Russia. Plus, the World Economic Forum in Davos kicks off. Stay tuned for an outstanding lineup of interviews, including COP26 President Alok Sharma, IMF's Managing Director, and the Bank of Thailand Governor. So you look at potentially some dip buying, some bargain buying within these markets, given that the S&P managed to close out Friday whilst avoiding that bear market. But the context, of course, is 7 straight weeks of declines for the S&P 500. That's the longest stint in terms of weekly declines for over 2 decades. And of course, when it comes to China, a couple of factors to weigh up then for investors. One, of course, is that record case numbers in terms of Beijing and whether or not the capital ends up in lockdown. The other are the remarks from President Joe Biden suggesting that tariffs on China are under consideration. In terms of how the markets are opening then, on the back of some of these news items, the Spanish IBEX gaining 1.2%, up 101 points. The FTSE 100 gaining 1%. We're expecting to hear, by the way, from the Bank of England Governor Bailey later today. Fed speakers as well out of the US later, who will be rounding out the picture potentially on where that central bank goes amid inflation and concerns about a recession. The CAC Quarante is gaining a little over 0.9%, almost 1% gain there for France. Let's switch it over and see how things are playing out across assets. We continue to watch, of course, the FX space, and Mark Cardmore from MLive will be breaking down what is happening with the dollar shortly. But you did have the first week in almost 6 weeks last week when you actually saw the week closing out softer for the greenback. Of course, what that means for markets and particularly EM in focus. S&P futures, you're looking at gains of 1.3%. The sterling pound cross 125. You're looking at a decent session then for the pound, up 0.7%. And the US 10-year, that benchmark at 282, you're seeing a move up in terms of yields about 4 basis points. Brent 113. You had the IEA coming out and saying that you should see prices go higher. That is a recessionary risk, according to the IEA. You're seeing gains of almost 1% for oil. Let's get over then to Bloomberg MLive Managing Editor Mark Cudmore. Mark, you've been looking, as I mentioned, at the moves in the US dollar.
Good morning, Tom. Well, the Bloomberg Dollar Index has just had its worst week in more than 8 18 months. You can see last week. And this is all about the market chasing a theme that really a change of trend. It's not because the fundamentals have changed massively. The idea is that we got a little bit stale or a little bit overdone on the idea that the US was in isolation in terms of fighting inflation aggressively, and yet its economy would cope with those dramatic tightening of financial conditions. Instead, we're turning more negative on US growth, and we're realizing the rest of the world is also going to have to hike rates aggressively. That means we're seeing this convergence trade of the rest of the world catching up the dollar in that theme. I'm not sure this is the big turning point yet, but because people were a little bit late to catch up on this, it was only a week ago people saw no chance of a dollar weakness coming. I think this theme has the legs for a couple of weeks. We will see at least a few weeks of sustained dollar weakness.
Bloomberg M Live Managing Editor Mark Cudmore, thank you for looking at the US dollar for us. Again, the weakness that we saw last week, what that means for EM and other assets, of course, as we weigh up where the greenback goes from here. And of course, the Fed, and we'll be listening out for those speakers later today to inform us as what the picture is for the FOMC amid these recession concerns. Let's get into some of the other key market drivers then with our M Live editor, Noor Al-Ali. Noor, good morning. Happy Monday. Our M Live survey of the week last week suggesting that our participants in the survey are looking at a further 10% drop for the S&P 500, which of course would take us firmly into bear market territory, which we just avoided by the skin of our teeth last week. Where do you see things playing out this week, given the upside that we're seeing in the morning session today?
Morning time. I'm in that camp, unfortunately. I do think there's further downside for stocks. If you're in the camp that sees rate pushing higher and putting in pressure on the stock market, you're definitely in the camp that is a lot more bearish on the stocks. But there's definitely some dip buying as well, right? Because we love the dip buyers. They always come back, they look at these valuations and they think, God, this is the actual moment for me to come into the market. I've been waiting for these numbers to come in. And if you do think that, okay, you know, market is going to come down, there's that camp that
tactic that worked last year, but it's not working this year, though, the dip buyers.
No, but there's always that belief that it'll still come back up. You know, what comes down must always come back up, right? I mean, I don't think that's true, though, because you have the growth concerns, you have inflation, you know, coming on higher, but there's also the narrative now shaping that perhaps rates have peaked for the time being, at least until we get into the Fed in the next FOMC meeting. We do have some of the hawks speaking today, Bostic speaking, and he's definitely going to put the pressure on. I don't know if he'll mention the 75% basis points. I know that's been taken off the table, but that is something to look out for in what he says.
And St. Louis Fed President, of course, James Bullard, coming out reiterating his view that you need to get to 3.5% by the end of this year on rates to get inflation down. Noor Al-Ali, thank you as ever. So walking through some of the key market themes on the 10-year, by the way, you're at 282, yields up just over 4 basis points in the session today. Right, let's head over to Davos, where Francine is standing by. Good morning, good morning, Davos. Good morning, Francine. In Davos, no snow, no Russians. I hope the coffee is good and a stellar lineup.
Yeah, good morning, London. Good morning, Tom. Yes, the stellar lineup that we had in the past is here in part, but of course the mood is very different. And I'm not talking about the weather. It's just you have, again, a war 3 hours from here. And so it's very different in terms of the past where it was more Boolean. Sure, we talk about climate change, but still the mood was usually a little bit more fun. We're joined now by Alex Sharma, the COP26 president, who has a lot on his hands on the back, of course, of COP26, talking about everything to do with climate change. So, Mr. Sharma, thank you so much for joining us on Bloomberg TV. There were very concrete goals in COP26, you know, phasing out of coal, some of the things on methane. What are you expecting from COP27? Does the war in Ukraine actually push the transition back significantly?
Well, I think what we've seen, even in the lead up to COP26, was that, you know, the clouds, dark clouds were gathering on the over international geopolitics, but we still managed to get a deal over the line, almost 200 countries. And I think it demonstrated that on this issue, countries have understood it's in their self-interest. Now, of course, you know, the world has changed. We've got Russia's illegal and brutal invasion of Ukraine. But I think what that has done, I mean, you talked about coal, for instance. I think what this war has done is also demonstrate to countries the vulnerability of relying on fossil fuels. And you're seeing commitments made by governments to accelerate clean energy, to accelerate renewables. And ultimately, I think there's an acknowledgement that our future does not lie rely in fossil fuels. In terms of the commitments that we got out of COP26, we're pushing forward on those. I held a meeting in Copenhagen a few days ago, together with Egypt, and we got some good commitments coming through there. The reality is we need to go much further and faster over the next 6 months.
But do you think because of the war in Ukraine, the bar's a little bit lower? So I understand it crystallizes some of the concerns and maybe it pushes the transition deeper, but will it take longer to achieve it?
Well, I think, you know, if there is a big push in terms of renewables, as, you know, all countries are talking about, and in the UK, for instance, we've published a British energy security strategy. It's all about having a big push on solar, on wind, on hydrogen, on nuclear. And if you look at the price of renewables, in terms of solar and wind, they've come down significantly compared to fossil fuels.
But in the meantime, we're also just trying to get energy at all costs out of any means, just to make out for that downfall and those high energy prices because of the cost of living.
Well, so I think there were commitments made at COP26 in terms of coal, in terms of at the G20 last year, in terms of no more financing of international coal projects overseas. I acknowledge that you know, there may be a possibility that in the immediate term, to deal with energy security issues, countries may need to do a little bit more coal. But what that should do is give us the space to build out in terms of renewables. And I think you're seeing that happening. I just want to be very clear about this. Fossil fuels are not the world's future.
We have a new Australian Prime Minister who's much more climate friendly than his predecessor. What does that change on the world stage for diplomacy with climate change?
Well, Australia is a G20 nation, and the G20 are responsible for 80% of global emissions. So, of course, I welcome the fact that you know, we're going to have you know, more countries coming forward with commitments. But ultimately, this is about making sure that every country delivers on their commitments. But the G20 matter; they really matter as part of this discussion. You know, I've been in Jakarta recently, talking to our Indonesian colleagues who have, of course, the leadership of the G20, and it's going to be vital, as we did last year, to use events during the year, the G7, the G20, the UN General Assembly, the Commonwealth Heads of Government meeting, to keep pushing forward the agenda on climate. What we cannot allow is, because of the war in Ukraine, for us to have a setback in terms of commitments on climate. What it should be doing is making us redouble our efforts to deliver on the commitments we've made.
Is now the right time to put a windfall tax on oil and gas companies?
Well, look, I mean, oil and gas companies have been making huge profits, extraordinary profits. I mean, you've seen in the last quarter profits which are, you know, billions above what the market was expecting. What they've talked about is investing that, some of that money in clean energy, billions in clean energy. What I want to see, and I've said this very publicly, I want to see in terms of the investment in the UK, for these companies to set out quarter by quarter, just as these profits are coming through quarter by quarter, what their plans are in terms of delivering on a clean energy transition in the UK. And, you know, it's a matter of transparency, it's a matter of fairness. They need to deliver on that. And of course, if that doesn't happen, then I think we have to keep all options on the table.
But why not tax them also to give to the ones that are, you know, suffering the most in the cost of living crisis? I understand that, of course, this is ultimately a decision for the Chancellor, but would you do it?
Well, Francine, as I said, look, we need to keep, you know, we're a pragmatic government in the UK. We need to keep all options on the table. What I want to see is these plans. They can't be about vague promises of what happens out to 2030. This is about detailed plans, quarter by quarter, how they're going to invest in a clean energy future in the UK. It's what they've talked about. We want to see the detail.
But is this about the transition, or is it also helping the ones that, you know, are struggling to make ends meet in the UK?
Well, I think this is about the transition, and of course this is also about, in the medium term, ensuring that we have domestic energy security, that we are able to have control over prices. And by the way, that's what governments around the world have understood. The way you ensure domestic energy security is to build out homegrown renewables and clean energy. It's what the UK is doing. Lots of other countries are committed to do that, and that's what we need to make sure now accelerates over the next few years.
Is there anything more than the government can actually do to help the people that in the winter will have to make a very tough decision between heating and eating?
Well, look, I understand that there are very many people in the UK, but of course across the world, who are feeling the cost of living as a real issue. In the UK, we have put forward £22 billion worth of support so far. Of course, we keep all of this under review. But what I would just say to you is that what we need to do, and this is what I'm doing here at Davos in terms of COP26, is to make sure those commitments on a clean energy transition are something that countries stick to. They stick to their commitments. When we kicked off take on the role of leading COP26, less than 30% of the global economy was covered by a net zero target.
Yeah.
We got that to 90% by the time we get to COP26. Countries need to make sure they stick with those commitments and they stick with the commitments they've made to reduce emissions by 2030 as well.
I mean, I understand you don't want to go back to the windfall tax in the UK, but is it something you'll be discussing with counterparts here about what the world can do together to actually, you know, also put extra pressure on some of these oil companies if they don't change by themselves?
Well, I'm having a range of discussions, as you would expect here, and part of that discussion actually is very much about that energy transition, and the same way that we had a political declaration to support South Africa, where a number of G7 countries came together to support South Africa with £8.5 billion as part of their clean energy transition and a just transition as well. That's really vitally important. There are people who are working in the fossil fuel sector who are going to need support as part of the retraining. In the same way that we've done that for South Africa, the discussions I've been having here is about how we can support other emerging economies as well through that transition plan.
Alok Sharma, thank you so much for joining us today. That was, of course, the COP26 president talking about, well, the transition and the fact that he's really hoping that we push forward with this and not take a step back down.
Great stuff, Francine. We'll be back with Fran, of course, with plenty more interviews from Davos in the next few hours. Coming up, we will stay across all the market moves in Europe and the US this morning. But next, we are speaking to IMF Managing Director Kristalina Georgieva live from the World Economic Forum. This is Bloomberg.
About what they call black soot caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome back to the Open. Happy Monday. We are 15 minutes into the European trading day. You're seeing decent gains. It is risk on across these markets. Gains of around 1.2% across European markets. There's a redhead crossing the terminal. The US has unveiled a 13-nation economic pact to reassert its leadership in Asia. This is an economic framework. It is called the Indo-Pacific Economic Framework. It is the United States and 12 other nations in Asia that have signed on to this, including the likes of Australia, India, Japan, of course, where the US president currently is meeting with his counterparts, South Korea, New Zealand, amongst those on the list, accounting for about 40% of global gross domestic product. There are some question marks around the details of this pact, but it is being framed and seen as a way to respond to China's influence in Asia. So this is the United States unveiling a 13-nation economic pact, again, to reassert its Asia leadership role. President Biden in the region. We'll get more details and break this out for you with Enda Corin and our team out of Hong Kong in the next 30 minutes or so. Let's get over now and back to Francine in Davos, who has a very important interview for us. Francine.
Thank you so much. Yes, I'm delighted to be joined here in Davos, day one of the World Economic Forum 2020-22, without any snow on the ground, by Kristalina Georgieva, a managing director at the IMF. Thank you for joining us, MD. There's a lot to talk about. Talked about recession, inflation, and everything in between. But we just had that breaking news about the U.S. signing an economic trade pact with 13 nations. That does give you hope about globalization not being dead?
Yes, it is a positive sign that we recognize international cooperation is good for everyone. And if we want to retain increasing standards of living, we have to work together for it.
What does it mean for the next 12 to 18 months? If you look at inflation, that could lead to famine. It's going to be extremely hard for especially the poorer countries. And then you have the chance of a worldwide recession. How high is that?
We are projecting a lower growth than we anticipated last year, 3.6% versus 4.9%. But let's remember, 3.6% is the average growth in the previous decade. In other words, we are still projecting to be in positive territory. However, since we put out our projection in which we downgraded 143 countries, what are the incremental changes? One, tightening of financial conditions. Two, appreciation of the dollar. Three, slowdown in China. All of this is making further downgrades not out of a question. And for some countries, there is now an increased risk of recession. But we do not anticipate a global recession.
I mean, you're absolutely right, especially this dollar rally, of course, has huge implications for some of the countries across the world. Are you expecting the IMF to have to step into countries a lot more because of all of these imbalances that we could live through in the next 18 months?
Well, look, we are living in a time of a crisis upon a crisis. Who is most at risk? The countries that were weaker to begin with. And we are already seeing an increase of demands for IMF engagement in Lebanon, in Egypt, in Tunisia, in Sri Lanka. And we are looking into the 2022 as a difficult year for especially developing countries under a high level of debt. When your cost of servicing your debt jump up and you are in a very tight fiscal position, of course, this is the time when the IMF has to step up, and we will do. Remember, we have $700 million still available to buffer the world economy.
How worried are you about Sri Lanka? Are your hands tied until there's some kind of deal on restructuring debt?
We are working at the technical level relentlessly. I feel for the people of Sri Lanka. This is a tremendous shock for them. We would like to see progress made, and we are already engaging with Sri Lanka's creditors to appeal for fast action on debt restructuring. Of course, to help a country, the country needs to help itself first. So how the politics would shape up would be quite critical.
The G7, I think last week, called on China, for example, to help some of the countries that are struggling with debt. Do you think there's a possibility, or if not debt forgiveness, help especially coming from China on this front?
We are seeing China more open to engage on debt restructuring because they're not blind. They see that with 60% of low-income countries in that distress or near it, many of them with big chunks of Chinese loans, either they go the Sri Lanka way or they have a preemptive action on that. The Gang, the governor of People's Bank of China, made it very clear that China wants and will fulfill its commitment under the common framework. Their problem is there are multiple institutions in China that need to be engaged. And the good news is that we see their interest to be more proactive. It is in the interest of the countries, but also in China's interest to prevent that shock.
MD, I remember, I mean, we haven't met in person at Davos for 2.5 years. Yes. And I remember you were one of my very first interviews where we started talking at the time, January 2020, about COVID. This was, we didn't really know what would be hitting us. How concerned are you that nations will go even further apart because of what we're living through? Like, what does Davos today need to do to make the world better?
We ought to recognize that when we are together, then we can solve problems. We have seen it with COVID. Coordinated action by central banks and finance authorities put the floor under the world economy. We could have been in a Great Depression. We are not, because we acted together. And it is critical at the time of increased tensions to identify the problems that we can solve together, like that, like climate.
Marshall Plan for Ukraine?
Oh, definitely, definitely. That would be necessary. The Ukrainian economy is devastated, and there is a vision in the country for a green future, transformed future for Ukraine. It would be great for Ukraine, but I think it would be also great for the neighborhood and the world to have a strong Ukraine.
Kristalina Georgieva, thank you so much for joining us today. That was the MD, of course, of the IMF, and with that, I'm going to send it back to you in London, Tom.
Francine, great stuff as ever. Thank you. Coming up, don't miss our interview with the Governor of the Bank of Thailand. That is coming up shortly, live from Davos. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Welcome back to the Open. We are 26 minutes into the European trading day. You're seeing gains of 1.2% across European equities. Futures stateside looking positive as well. A couple of individual corporates that we want to focus on. Siemens Gamesa, there's been updates there from Siemens Energy on their bid. You're seeing the stock up on the back of that, offering 18.05 euros per share. When it comes to Shell, the oil price, you've seen the oil up this morning. The IEA saying prices are likely to rise further, and Kingfisher beating with their results. Investors pushing that stock up by almost 3%. Coming up, Biden in Asia. The president's busy agenda in South Korea and Japan has seen pacts on security and trade. We delve into the details next. This is Bloomberg.
That it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed. Welcome back to the Open. We are 30 minutes into your European trading day, and here are your top stories. European and US futures jump after the S&P sidesteps a bear market close, but record COVID cases in Beijing sour sentiment in Asia. US President Joe Biden says he will intervene if China invades Taiwan. Speaking alongside Japan's Kishida, the 2 leaders presented a united front against Russia. Plus, the World Economic Forum in Davos kicks off. Stay tuned for an outstanding lineup of interviews, including Canada's Innovation Minister and the CEOs of Mahindra & Mahindra and Standard chartered. It is risk on in these markets. European equities currently gaining around 1%. So pairing some of the earlier strength, we had seen a jump of around 1.3%, coming off that a little bit. But nonetheless, as we said in the headlines, the future stateside pointing to gains of between 1.1 and 1.2%. That's after the S&P 500 just missed out, heading into bear market territory, though the MLive survey and respondents there suggest that a further downside of 10% should be factored in for the S&P 500. But there's some bargain hunting, dip buying, and weighing up of the messages that we're getting out on China, particularly around COVID, and then the comments from Biden, not just on Taiwan, but also that the tariffs on China are being considered. In terms of your sectors, every single sector in the green here in Europe, led by energy, up almost 2%. The IEA saying that further price rises may be factored in for oil. Basic resources gaining 1.9%. Travel and leisure also firmly in the green, up almost 1.7%. The least positive gains being seen in the banking sector, up 0.2%. You've seen yields up across the US Treasury space. You're looking at the US 10-year of 2.81, yields up around 3 basis points. Right, let's get back to the geopolitics then. And in his first visit to Asia, President Biden had a strong message for China.
Are you willing to get involved militarily to defend Taiwan if it comes to that?
Yes.
You are.
That's the commitment we made.
And by the way, we've had some responses from China, the Foreign Minister Wang Yi, on the back of that comment by the US president, saying that China will protect its interests and its sovereignty, according to Wang Yi. No one should stand against China's 1.4 billion people. Of course, from Beijing's perspective, Taiwan is part of their territory. And of course, longer term, they have plans to reincorporate it back into the motherland. In terms of this economic partnership, then, we also had the announcement just in the last 30 minutes that the US has signed the Indo-Pacific Economic Framework with 12 other nations in Asia, including Japan, South Korea, New Zealand, and Australia, partly to counter China's influence in the region. For the details, we're going to bring in Bloomberg's Enda Curran. Enda, what do we know about this pact and the significance of it?
Well, it's still early stages, Tom, but we're getting some meat on the bones of this. The idea is it's an agreement centered around 4 pillars that have at its heart topics such as climate change, a resilient economy, i.e. getting better prepared for future disasters and disruption, and the digital economy is at the center of that as well. So it's kind of centered around themes such as that. They have on board some big economies like India and Japan and Australia, and New Zealand's there as well, then a handful out of Southeast Asia, obviously no China. Now, the significance is that it's kind of the US's first big trade push in the region since they pulled out of the old TPP back in 2017. So the thinking is, here comes the US again with some kind of an economic framework for engagement. But of course, the devil's in the details. This particular package so far doesn't include, lower tariffs, for example. There's no guarantee that it will be met by political agreement on the US side. And indeed, even among those states who have initially signed up, it isn't yet clear which governments will be signing on for what parts of it. Those details will come out over the coming months. So yes, it's a headline of US engagement again in the region, but a lot to be worked out on the detailed side of it.
And Enda, you talk about tariffs, and there was a line from President Biden suggesting that tariffs on China are under active consideration, whilst he also tied in Taiwan by commenting when asked about whether the US would defend Taiwan, and saying quite clearly that yes, he and the United States would, on a subject where traditionally the US has gone for opacity and a lack of transparency for obvious political reasons. What should we make then of the remarks on tariffs, the remarks on Taiwan?
Well, it's, on the one hand, you could say hawkish remarks on Taiwan, Tom, obviously making clear that the US would be willing to militarily defend Taiwan in the event of any action there. On the other hand, of course, you could say he's reinforcing the one China policy. I mean, his spokespeople were quick to make the remarks afterwards that he recommitted the US to the one China policy. So the policy of strategic ambiguity, there's no obvious change in that front. But nonetheless, you'd have to say it's on the hawkish side of things. And obviously, Beijing will respond to those comments. On the trade front, it gets a bit more complicated because, the US is battling inflation at the moment. There's a feeling that perhaps easing up some of these tariffs might take pressure off on the inflation front. at the margins. Probably not going to be a game changer, but one that you would have to assume would be tempting for the US administration to see what they can do there. And clearly now with the US Treasury Secretary pushing in that direction and President Biden himself saying he's open to the idea, we'll probably start to hear more traction on the tariffs front over coming weeks. But it's unlikely, I would imagine, to be a game changer in the US inflation story.
Okay, Enda Curran joining us out of Hong Kong to break down the implications of this Indo-Pacific Economic Forum or framework, and of course what we've heard on tariffs from the US president. Thank you. And just a line from the Chinese side, Wang Yi, the foreign minister, saying that China is glad to see regional cooperation when it comes to that Indo-Pacific Economic Framework. Let's head back to Davos now, where Jacinda Armin is joined by the central bank governor of one of those 12 Asian nations in that economic pact. Jacinda.
Well, you're right, Tom. We're talking about Thailand, of course. I mean, it's not just about the pandemic recovery. It's also for Asian economies, it is about the strong dollar that's giving them a lot of headache. Let's get perspective from Bank of Thailand Governor Sutiwat Naraput. He joins me right here. Governor, good to have you with us. We take a look at the Thai baht, down 6% in the last 3 months, among the worst performers in Asia. Are you concerned? I mean, given the fact that it was the Thai baht that dragged all the currencies back in 1997?
No, it's a very different situation from 1997. There's no doubt that there's been a lot of exchange rate volatility. If you look at the year-to-date numbers, it hasn't been that bad. We've gone down about 3-odd%, so it's roughly in the middle of the pack of currencies in Asia. But again, in terms of the worry and concern, it's not a situation like in 1997 where the corporate balance sheets are very weak. We had a lot of external debt and not enough reserves. Now our external buffers are very strong. So our concerns in terms of like depreciation of the currency, the impact on the local economy in terms of financial stability, our concerns about capital flight are much less than before. It's a very different
But it's not just about the strong dollar. It's also about the weak yuan, which traditionally, historically, brings down all EMs like we've seen in the last 12 months or so. What could you do? What might you do to ensure that the baht remains stable?
As you mentioned, most of the stuff that's been driving the movement of the baht hasn't been local factors, but it's been driven largely by what's going on with the dollar and the yuan, which is beyond our control. We don't have a whole lot of control over that. What we can do and what we try to do is to make sure that the volatility, especially the day-to-day volatility, is not too large. We don't try to set a level of the baht because we have a floating exchange rate regime, but we don't like to see excessive.
But are there tools? Are there tools you might tap? What tools in particular?
There are tools that any kind of central bank uses, which is like some FX intervention in the markets, particularly when the intraday movements are too large. The reason that we're concerned about the excessive volatility is, again, a lot of our exporters don't hedge, so too much volatility tends to affect them. But we don't try to manage it so that there's any particular level, just to try.
But is there fair value, a gauge of what fair value is right now?
I mean, there's no, I think, clear set measure for what is a fair value. It depends upon what market forces are like, and we allow the baht to tend to move in line with those market forces.
Inflation, a huge concern for every country right now, and Thailand has raised its inflation target to as much as 5.2%. How worried are you, and how much might that escalate in the coming months?
Hasn't, just to be clear, we have a flexible inflation targeting regime. That target hasn't changed. That's still 1 to 3%. Our forecasts for inflations have increased. The official latest forecast that we put out, it's increasing from, say, 1.2% last year. This year we expect something on the order about 4.9, but there's probably some upside risk in that forecast. But we do expect it to come back within our range next year at about 1.7. The inflation is no doubt trending higher, and it's way higher than our inflation rate throughout the year. But I'd like to point out that the inflation in Thailand, as with many countries in Asia, is quite different from what we see in the advanced economies. It's mostly cost-push inflation. It's relatively concentrated in energy and food. We don't see the kind of demand-side inflationary pressures in terms of an overheating economy, and that's largely to do with that in Asia, in Thailand as well. We're at a different part of the economic cycle than they are in the advanced.
But inflation, if inflation persists, if inflation trends higher, the consumer will get hit. How could you mitigate that? Anchor inflation. Right.
The anchoring is very important. In Asia, what we do see is that the energy inflation has been a bit more muted than in the advanced economies. Part of that is the government has undertaken fiscal measures targeted towards trying to mitigate and mute the prices of the increases in gas prices and whatnot. That's had an effect. On the banking side, on the central banking side, the key for us is really, we have a medium-term inflation framework. So the key for us, the critical thing for us is not to see kind of second-round effects happening, not to see too much broadening of the things that are increasing in prices, and very importantly, as you mentioned, to make sure that the medium-term inflation expectations remain anchored. Right now, to look based upon the latest surveys, they're still relatively anchored close to the top end of our inflation targeting range, but we're not sanguine. We've got to keep a very close eye on whether those second-round effects are starting to occur. There are a lot of moving parts right now. There are moves to, for example, increase the minimum wage in Thailand that are in discussion towards the end of the year. The baht, as you mentioned, is depreciating. That tends to feed into higher headline inflation. So we need to keep a close eye on all those things.
There's a lot of hope right now that the Fed will be able to navigate a soft landing. If you take a look at the market, I mean, it's quite worrying. 7 weeks of decline. What is that suggesting, you think, from your perspective as a governor? What is that reflecting in terms of the state of the economy?
I think in terms of the U.S., I think the Fed has a very difficult challenge. I think their term is they're trying to navigate and get a soft-ish landing. That's not particularly easy. I do think that a lot of my own personal view is that a lot of the mood of the doom and gloom that we see is driven more by what the market has been doing. But I think, as a famous economist, Paul Samuel said, the market has predicted out of 9 of the past 5 recessions, so it might be an overreaction to what's going on. That said, I do want to say that the policy challenge in the advanced economies, like the U.S., is very different from the policy challenge in Asia, because we're at a different part of the economic cycle. In the U.S., it's trying to get a soft or softish landing. For us, it's trying to ensure that the takeoff and the recovery continues and remains smooth.
In your view, has Powell taken the right steps?
Far be it for me to comment what others think.
Come on, Governor. You're comfortable with how Powell has handled?
Yeah, I think they have a very difficult job, and I think they've done as good a job as can be expected.
Governor, we thank you for your insights
Thank you
today. And that was Bank of Thailand Governor Sutiwart Naraput there. Paul, handing it back to you.
Okay, fantastic stuff. Thank you, Haslinda Arman, on the ground in Davos with that important interview with the central bank governor of Thailand. We're going to bring you some live pictures now of President Joe Biden. We're going to listen in. He is in Tokyo. So let's listen now to the US president.
Today with countries from across the Indo-Pacific, Australia, Brunei, India, and by the way, Mr. Prime Minister, thank you for being here as well. Prime Minister of India, Republic of Korea, Malaysia, New Zealand, Philippines, Singapore, Thailand, and Vietnam. We're here today for one simple purpose. The future of the 21st century economy is going to be largely written in Indo-Pacific, in our region. The Indo-Pacific covers half the population of the world and more than 60% of the global GDP. And the nations represented here today, and those who will join this framework in the future, are signing up to work toward an economic vision that will deliver for all peoples, all our peoples. The vision for an Indo-Pacific that is free and open and secure as well as resilient, where economic growth is sustainable and is inclusive. We're writing the new rules for the 21st century economy that are going to help all of our countries' economies grow faster and fair. We'll do that by taking on some of the most acute challenges that drag down growth and by maximizing the potential of our strongest growth engines. Let's start with new rules governing trade and digital goods and services, so companies don't have to hand over the proprietary technology to do business in a country. Let's create a first-of-its-kind supply chain commitments to eliminate bottlenecks in critical supply chains and develop early warning systems so we can identify problems before they occur. And let's pursue other first-of-its-kind commitments to clean energy and decarbonization. The climate crisis is an existential threat that is costing us trillions in economic damage, but there's also incredible potential and opportunity to solve problems and create good jobs by transitioning to a clean energy economy. Let's choke off the loopholes that get at the corruption that steals our public resources. It's estimated that corruption saps between 2 to 5% of global GDP. It exacerbates inequality. It hollows out a country's ability to deliver for its citizens. And tax and trade belongs in the same framework because if companies aren't paying their fair share, it's harder for governments to pay for trade adjustment assistance or to fund education or health services or a range of public investments that make it so hard for families that feel like they can't raise their children and give them a better life. That's ultimately my economic policy and foreign and domestic, what our foreign and domestic policy is about. And that's what this framework is about as well. So starting today with 13 economies, economies that represent diverse sets of perspectives as we work on pursuing our common goals. That's critical because a key to our success will be the framework's emphasis on high standards and inclusivity. This framework should drive a race to the top among the nations in the Indo-Pacific region. And I want to be clear that the framework will be open to others who wish to join in the future if they sign up and meet the goals and work to achieve those goals. I'm glad to have seen so many of you in person the past 2 weeks. At the U.S.-ASEAN Summit, I saw many of you in Washington and during my travels to Asia, and I'm eager to hear from each of you today. I thank you for taking the time to be part of this framework launch, and let me close by saying the United States is deeply invested in the Indo-Pacific. We're committed for the long haul, ready to champion our vision for a positive future for the region, together with friends and partners, including the nations in this room and on the screen. It's a priority in our agenda, and we're going to keep working to make progress with all of you every day so that we can deliver real, concrete benefits for all our people. That's how I believe we'll win the competition of the 21st century together. So thank all of you again for joining today, and I'll invite Prime Minister Kishida to say a few words now. Mr. Prime Minister.
Thank you, Joe.
ジョーさんありがとうございます。
Okay, that was the US President, of course, discussing that Indo-Pacific economic framework that has been announced today, the United States plus 12 nations from Asia, and just underscoring that he wants to see this framework as being open, that this will be the future in terms of rewriting the rules around trade, particularly in the economic Pacific Asian region, I should say, writing new rules for the 21st century economy. Critical supply chains are in focus, the focus on decarbonisation, and saying, again, that this framework is open to others who meet those criteria. Right, back to what's happening in the banking space. Credit Suisse CEO Thomas Gottstein says he has a clear mandate from the board to continue in his position. Gottstein has come under pressure because of a string of scandals. He was speaking to Bloomberg anchor Francine Lacqua in Davos. Here's more of what he had to say.
With the high inflation shocks that we see now in certain areas of this world, it's very clear that people are somewhat insecure. They are in risk-off mode. But our house view still is that there won't be a recession, neither this year nor next year. There will be a slowdown. I think our house view global GDP is 3.3% for this year and 2.9% for next year. They have come down. And if you look at certain markets, whether it's equity markets or high-yield markets, they have clearly come under pressure.
I mean, under pressure, they've been a bit crazy.
Yeah, well, they're basically been pretty quiet, let's put it this way. But our clients, they don't panic. You know, they are looking at how things develop. And they stay engaged, and that's very important for our wealth management clients and our wealth management relationship managers, that they stay in front of the clients, and that's what I'm really focused on.
So there's no, you're not seeing any outflows, they're still fully invested?
Well, what we did see, like many of our competitors, is some deleveraging as part of, you know, assets under management going down, certain equity prices going down, but some deleveraging, especially in Asia. And obviously with what happened in Russia and in some other parts, that AUM have gone down, but no outflows as such, no.
Does it actually hurt your ability to collect some of the fees in certain parts of the markets with some of your wealthy clients, or not so much?
Well, if you look at our three revenue streams, so net interest has come under pressure because we had lower lending volumes. But now with interest rates going up, that should be a positive element going forward. Recurring revenues have also come down because of lower AUMs. And transactional revenues actually have started to stabilize now. Volatility sometimes is a good thing for transactional revenues, so have started to pick up. But it's clear that 2022 will be at lower levels than last year.
And that was Credit Suisse's Thomas Gottstein speaking to Bloomberg anchor Francine Lacqua in Davos at the World Economic Forum. Coming up in the next hour, we speak to Standard Chartered CEO Bill Winters. That's at 9:30 a.m. London time, live also from Davos. Plenty more on the markets coming up. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions. However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web. This is Bloomberg.
If only I knew.
You don't know.
I know, but I can't tell you.
I don't have the crystal ball at all. Like, mine is just dark when I look into it. I can't see anything.
I think we're getting close to it, actually.
When you look at the trend, it's still pointing downwards.
We still have further to fall.
I think we're going to end the year slightly higher than where we are today.
Once we get past that and get some clarity from the Fed, I think the markets will ease up.
You're going to need more than that to sort of stop this fall.
We think that over the summer, the S&P could touch down to around about 3,600.
If somebody here has the bottom indicator, just my phone number, I'd love to know that.
I love that sort of string. Right, that was our MLive survey considering when the S&P 500 might hit rock bottom. For more on this, we are joined by Danny Berger. Danny, we had a lot of people saying, I don't know when it's going to happen. Ken Griffin saying it's like looking into a murky crystal ball. What are we thinking about when we look at the S&P 500, the catalyst going forward?
Well, I do feel like the general sentiment is pessimistic. Sure, a lot of people aren't willing to put like an exact number on it, but we do have our MLive poll survey. Surveys about more than 1,000 people on this this point. So perhaps when it's aggregated a little bit more anonymous, Tom, people are willing to give a more exact number. Now, the median of the survey, it was, you can see here, around 3,500. That would imply another 10% drop from Friday's levels. Indeed, only 4% of the respondents to the survey believed that we have hit the bottom. You heard a little bit of that in that tape we just played. A few people even think we're going to go back to the pre-pandemic levels. That's around this 2,400, 2,200 level as well. So there are definitely some concerns with the tail risk. And it is this mantra of don't fight the Fed. The Fed, they're tightening financial conditions, and a lot of that involves stock markets falling as well. Now, at the same time, we are also asking them about the economy, these respondents as well. And on that point, they did list a few different things that could get the economy back on stable foot. We have the Fed ending its hiking cycle, but of course, that's not a 2022 story. That's perhaps a next year story. There's also China ending COVID zero. Who knows when that will happen? Also $70 a barrel and peace in Ukraine. Again, a lot of unknowns of things that people hope will help lift the economy, Tom.
The hope is there. The reality, of course, somewhat mixed. Danny Berger, great stuff. Thank you for walking through those responses to the MLive S&P 500 question when it reaches a bottom. In terms of live pictures out of Tokyo, here's what you've got. We heard from President Joe Biden earlier. Now you can see Prime Minister Modi, of course, of India. There is Mr. Kishida of Japan, and then Joe Biden, of course, the US president. After the announcement of the Indo-Pacific Economic Framework, looking to recraft the rules for the 21st century when it comes to that economy and keeping it open, said President Biden. Plenty more coming up. Surveillance Early Edition is next. This is Bloomberg.
city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
People are somewhat insecure. They are in risk-off mode. But our house view still is that there won't be a recession, neither this year nor next year. There will be a slowdown. I think our house view global GDP is 3.3% for this year and 2.9% for next year.
I'm talking with the Secretary when we get home. I am considering it. We do not oppose any of those tariffs. They're imposed by the last administration, and they're under consideration.
I think there is a lot of demand for starting to rebuild bridges, cooperating again.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition on this Monday, the 23rd of May. I'm Francine Lacqua in Davos for the World Economic Forum, and here's what's coming up on today's program. European stocks surge after Joe Biden hints at a relaxation of Trump-era tariffs. U.S. futures also gain after the S&P sidesteps a bear market close. U.S. President Joe Biden says he will intervene if China invades Taiwan. Speaking alongside Japan's Kishida, the two leaders present a united front against Russia. Plus, the World Economic Forum in Davos kicks off. Stay tuned for an outstanding lineup of interviews, including Canada's Innovation Minister and the Chief Executives of Mahindra & Mahindra and Standard Chartered. Now, first thing is first, so let's check on the markets, especially since it's a sunny day here in Davos, and the markets aren't doing too badly either. Now, the story is one of China. The story is one of trade out there. Let's get the board up to look at the European stock 600. It's very clear that both stocks, but also the Chinese renminbi, advanced after Joe Biden said China tariffs imposed by the Trump administration were under consideration. I'm looking at dollar, treasuries, both retreating. Now, if you look at energy and basic resources, those shares actually leading the gains in the Europe stock 600. U.S. equity futures also jumping more than 1%. Stocks rising in Asia and emerging markets. We had a good conversation with the IMF head about the dollar rally and what that means for some of the countries that may need debt restructuring and that it may also need the IMF support going forward. So we'll have a full roundup of markets. When you look at the European map, a lot of green on the screen, just a bit of pressure on the Italian FTSE MIB. But overall, again, if it means less tariffs, this is something that would be considered beneficiary to the world. Now, the U.S. has reached a trade deal with Asian economies. The pact brings together countries worth 41% of global GDP. Now, for more, we're joined by Bloomberg's Chief Asia Economics Correspondent, Enda Kern. So, Enda, first of all, good morning. What more can you tell us about this deal?
Well, it's early stages in this, Francine. It seems to be basically a loose kind of economic framework, like you mentioned, about a dozen members in Asia, including some big economies like India and Japan, South Korea, Australia, a handful from Southeast Asia, 7 from Southeast Asia as well. There are 4 pillars to it, centered on themes such as a clean economy, the digital economy, a resilient economy. That's about basically getting ready for future kind of disasters and shocks, for example. And so the thinking is that these countries will come together and coalesce in these matters. But it's not a deal to bring down tariffs per se. There isn't any guarantee that the US Congress will necessarily weigh in, and it's not yet clear which of those countries who've signed up are really on board for which pillar and for which part of this Indo-Pacific framework. So, as I say, it's kind of a US push in the region again. It's first since the pulling out of TPP back in 2017, but it's not necessarily a major kind of trade agreement, and a lot of the details have yet to be worked out.
Yeah, so, and if you look at stocks around the world, I mean, they're really taking this in their stride. They think this is great. Does it just show that globalization is not dead, that would benefit actually markets, or are they getting ahead of themselves?
Well, I don't think this particular framework is going to be a game changer, Francine. I mean, again, the details remain to be seen, but when you look at what we do know, it's not about bringing down tariff barriers, for example. It's more about cooperation on some of these core pillar areas, and it remains to be seen who signs up to what exactly in those pillars. But I think perhaps the other takeaway from today's trade story is the China and the US perhaps going to start talking about bringing down some tariffs. President Biden making the point that he could reduce some tariffs on US goods. That's probably more, though, about the US inflation story than any kind of warming of US-China relations, because China themselves were quick to make the point that they view this new Indo-Pacific economic framework as divisive. So I would say this particular framework doesn't necessarily appear to be a game changer for markets, and neither, of course, will the reduction, I think, in tariffs be a game changer for US-China relations.
Is it a game changer, the fact that the President of the United States of America actually said that the US would intervene if China were to attack Taiwan?
Well, obviously, it's a very hawkish comment. He was asked a direct question. He gave a direct answer, Francine. In the same answer, though, he did also say that the US is committed to the One China framework that they have agreed already. And in fact, his spokespeople afterwards are making the point that the president reiterated the One China framework of strategic ambiguity, so to speak. So again, it's a hawkish headline, and it will generate a response from Beijing. It does show that the US is committed to Taiwan, and in the context of what's happening in Ukraine, of course, it's a very significant remark. I think, though, the question remains, is it really a game changer for the US-China relationship over Taiwan? That will be debated by the experts, but I think he did reiterate sticking to the One China framework. Taiwan is not included in the new Indo-Pacific framework that was announced today either. So those are kind of points that add to the kind of ongoing status quo of the US, China, Taiwan sort of relationship.
Enda, thank you so much, as always. Enda Curran, our Chief Asia Economics Correspondent. Now let's also get into the key drivers, market drivers, with our MLive editor, Noor Ali. Noor, great to speak to you, as always. I guess less recession concerns, less inflation concerns, and the market's really latching on to what we heard in terms of trade deal.
Yeah, absolutely, because any sign of a reversal of the Trump-imposed tariffs on China is a good thing for Chinese stocks. And in retrospect, that's the positive contagion finally coming through from Asia. Typically, when we see Asia rebounding, you do see a bit of that good news coming into the European session, and that's exactly what we've got this morning. But the question is for how long?
Yeah, so if I was going to ask you, Noor, just to put you on the spot, because, you know, it's a Monday, it's for how long? We were almost on the verge of a bear market, and then we see that reversal. How much volatility are you expecting?
I think this week might be a good week for stocks in the short-term interim, hoping that nothing else happens. But I think that's a little bit difficult to ascertain, right? We did just run an MLive survey where, you know, the median or majority of the responses expect another downfall for stocks, about falling to the S&P 500 is expected, according to survey respondents, to fall to 3,500. It's now trading at the 3,950 level or so. So I do think that the market is a little more pessimistic than we would expect, but the dip buyers are still trying to make a comeback. Let's see if they'll last.
Noor, anything else that we should be watching out for, which is maybe not on everyone's radar? So I know you look at FX, you look at currencies in, you know, great detail. Is there anything in terms of the dollar rally that we should worry about if it goes much higher from here?
I think the dollar rally, as we've been flagging on the Markets Live blog for quite some time, has fizzled out. I think also this is good news for commodities. This is good news for emerging markets. This is providing temporary relief for emerging markets currencies that have just been battered by this rallying dollar. We are seeing a bit of, you know, it is come down off these highs, and I don't think the dollar is king narrative sticks through just yet. You do have recessionary pressures or fears coming on. You do also have inflation. And now, if those tariffs do come out or unwind between China and the US, that imposes some pressure on inflation because the yuan would rise. And so, you know, we do import a lot of goods from China. So ultimately, I think we're narrowing in a very tricky situation for the dollar. And I don't think it can hold its haven trademark for long.
Thank you so much. Our MLive editor there, Noor Ali. Now, coming up, we speak to Canada's Innovation Minister, François-Philippe Champagne. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Davos. It's day one. We'll have then day 2, day 3, and day 4. Of course, the focus is on Ukraine. The focus is a lot more on this inflation surge, what it means for energy security, and of course, how the world can cope and whether we tip into a recession. So we're going to have some great discussions, not without their critics of Davos. So we'll see exactly what happens over the course of the week. Now, joining us to talk more about Davos, his expectations, maybe some of the things that he would do differently is François-Philippe Champagne. He's Canada's Minister for Innovation. So, Minister, thank you so much. Great pleasure to catch up with you in Davos. It's not winter.
As a Canadian, it's quite a difference, trust me. But it's good. I came here almost 20 years ago. My first Davos at the time, so things have changed. But I would say, I said that to Klaus Schwab yesterday, Davos always remained relevant. I think today there's a lot of emphasis on energy security, climate change, obviously the war in Ukraine.
But, Minister, what are you here to do? Is it business because you need to meet with suppliers? I know we'll talk a little bit about Huawei in a second. Or is it really to try and be part of this global voice of what should happen? It's a bit of the two. You know, one of the reasons you're here is to, in my case, is to make the case for Canada. You know, I think that top of mind for people are energy security, where I think Canada can be part of the solution. You mentioned supply chain, which are becoming more regional. So the whole issue around critical minerals, how can we help? The whole concept of ESG. And last week I spent the whole week in Germany and honestly listening to a lot of German businesses. We're trying to see how Canada can play that role, greening the supply chain. How can we help? And obviously, to your point, how can we help in the global agenda as well? Yeah, so how tricky are supply chains right now? I know we're talking about green supply chains, but really it's getting from A to B, getting some of the shipping costs under control that would help the world first. Well, what we've seen from our perspective, you know, we have a big auto sector. We've rebuilt the bio manufacturing sector. We see global supply chain becoming more regional, certainly more emphasis on resiliency than pure efficiency. Germans have called that local for local. So when you're looking at that, at least in our case, in the context of North America, thinking about critical minerals, thinking about how can we make sure that we use our renewable energy to green our supply chain, whether it's green aluminum, green steel, green batteries. How can we power the world with greener solution? This is really the theme. So talking to business people here, but also wanting to influence the global agenda. I think the imperative is there, and we have solutions. But Minister, Canada is still so reliant on fossil fuel. Well, I would say part of it, but I mean, you have to remember that if you look at the, you know, the production of renewable energy, we're close to 80% in Canada. So electricity, I mean, everything is becoming electrified in a way. We've removed, for example, in the steel industry, we're moving to electric furnace. So we're trying to decarbonize in order to be able to, for example, in our case, produce the car of the future, which are going to be much greener. Yeah, I mean, you know, the critics will say that actually Canada could have done a lot more when it came to climate change pledges. And the question is whether that changes in the future. But talk to me about Huawei. So this was the big news right, in the last 10 days, the banning of Huawei. Well, we decided that our intention was to exclude them and ZTE from our network, the 5G network in Canada. This was the right decision. It was the right decision for Canadians. It was the right decision for national security.
but also considering what the 5G is going to be in terms of our lives. I mean, as you know, there'll be many points of connection. So protecting the network is very much aligned with what our allies have been doing in Australia, the United Kingdom, the United States, and certainly this was a decision that we made after consulting with allies, but also our own intelligence agencies.
Minister, what are you afraid of? So, I mean, 5G, again, it's, shorter frequencies. Is this because it's a foreign entity, or is it because you're worried that the Chinese would be spying?
Well, we had to look at a number of factors. As you know, when you make these decisions, they were very much informed by intelligence reports. You would expect I can go into the details of that, but certainly I think that our conclusions are very much aligned with others in the sense that we want to protect the integrity. If you look at the digital world today, the network infrastructure is going to be vital. I mean, people think about physical infrastructure, but if you think of the world, the digital world we're going, these networks, which are going to be with us for decades to come, to protect them, to make them more resilient, to make sure that there would be no state or foreign actors that could eventually play in the network, for us was key in order to protect that for generations.
Because this, and I know it's like intelligence reports you come, but what's the danger in this? Is it components inside? Is it listening into conversations? Like, it's unclear, when countries buy it, it's still unclear exactly why or
when
what the
you talk about
danger
national
is.
security, it's a whole range of things. You've heard that from our American colleagues, from our British colleagues. I think our conclusion, like I said, is very much aligned. We've been talking to a number of allies on that. And I think when you come to national security, the viewers will understand, I always work on the base of prudence. You have to be prudent. You're talking about one of the most critical infrastructure that will drive our economy in a way will impact the daily lives of Canadians in our case. So prudence is certainly, in my opinion, what you need to apply when you're looking at that, especially that you want resilience for decades.
Minister, what are you expecting here? So are we becoming global, deglobalization, or is it, it seems like, so we went into Davos where a lot of people say, you know what, it's going to be very difficult. Everybody has a mind of their own. They're thinking internally. And then we wake up and there's news that actually the U.S. signed an agreement with 13 other countries in the Asia-Pacific region.
I think it's a bit of both. In a sense, I see supply chain, like I said, being more regional, but I do see that, stability, predictability, and the rule of law are in high demand and short supply. That's for sure in the world. So certainly countries like Canada, we've been working with a concept of trusted partners and making sure we're more resilient. You mentioned a number of things. We went from vaccines now to microchip. With my colleagues in the United States and Europe, we're always saying, okay, what's the next thing? How can we plan for 30 years ahead so we don't find ourselves in where we have been with respect to vaccines? So there's a sense that we will need each other, that there's some economic blocks being formed. There's certainly a race to standards and norms that will dictate some of the products that we'll see and technologies that will come. But I think there's also an emphasis on science, technology, and innovation, because that's where you find the breakthrough.
Thank you, Minister. How many languages do you speak? Because you have to understand, Minister Champagne sat down and spoke to me in perfect Italian, and that took me by surprise.
Well, three of them. But this is kind of being, Canada is this inclusive society, so it's not uncommon for people to speak 2 or 3 languages in our country, just like you do in Europe.
I mean, three languages for now, and then I'm sure by the time Davos is over, he'll have picked a 4th one. Thank you so much for joining us. François-Philippe Champagne there, Canada's Minister for Innovation. Coming up, stocks gain after President Joe Biden says China tariffs imposed by the Trump administration were under consideration. We look at what's moving markets today, and this is Bloomberg.
Soaring energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I knew.
You don't know.
I know, but I can't tell you.
I don't have the crystal ball at all. Like, mine is just dark when I look into it. I can't see anything.
I think we're getting close to it, actually.
When you look at the trend, it's still pointing downwards. We still have further to fall.
I think we're going to end the year slightly higher than where we are today.
Once we get past that and get some clarity from the Fed, I think the markets will ease up.
You're going to need more than that to sort of stop this fall.
We think that over the summer, the S&P could touch down to around about 3,600.
If somebody here has the bottom indicator, just my phone number, I'd love to know that.
Well, that was our MLive survey, considering when the S&P 500 might hit rock bottom. Now, for more on this, we're joined by Danny Berger. Danny, good morning. What level do the majority of our respondents expect the S&P to get to?
Well, Francine, a lot of different opinions. I want to show them. I'll get to this screen I have in front of me in just a moment about the economy. I want to show you the levels first. We do have a graphic of this. And essentially, only 4% of the survey respondents in the MLive poll survey, which surveys about 1,000 people, see a bottom. Only 4%, Francine. Now, the majority of them see the S&P convalescing around 3,600. That would be about a 10% drop from the current levels, a 27% drop from the January high. It really is this mantra of don't fight the Fed. The Fed has been very clear that they want to tame inflation. There you go. There's the chart right there. So here's where the majority are, around 3,500. So you have the Fed saying they want to tame inflation. To do so, they're going to tighten financial conditions. And what tightens financial conditions? A sell-off in stocks. So if you believe that, you even get some people here saying that we might see a retest of the pandemic lows around the 2,400 survey response level. So Francine, a lot of different opinions, and I should say the professionals, the pros, who it is to say where the S&P will end. Those are also one of the most split in the past decade.
Yeah, could I just say, Danny, I didn't do very well on that survey because I asked all of my guests and none of them would give me a level. So they're kind of like,
no one wants to give an answer. It's fine.
A little bit lower. I know, because then you hold them account to it. Danny, thank you so much. Danny Berger there with the very latest on the survey. Now, we're just also getting some breaking news out of Christine Lagarde. This is her comments in a ECB blog post saying that the ECB is likely to exit negative rates by the end of the third quarter. Madame Lagarde, the president of the ECB, also says the ECB can design, deploy new tools if needed. So this is the big deal, of course, out of Christine Lagarde saying that they are also expecting to end net purchases very early in the third quarter. Don't miss our exclusive interview with Christine Lagarde from Davos. That's tomorrow. That will be a good conversation to try and understand exactly her thinking also on negative rates and what we could do better to alleviate some of the concerns from some of course, the people that are hit the most by this inflation rampage. Coming up, the U.S. reaches a trade deal with Asian economies. The pact brings together countries worth more than 41% of global GDP. So we have more on President Biden in Asia next. This is Bloomberg.
At the Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
European stocks bounce after Joe Biden hints at a relaxation of Trump-era tariffs. U.S. futures gain also after the S&P sidesteps a bear market close. The American president also announces a new U.S.-led Asia-Pacific trade pact made up of 13 countries. He says he will intervene if China invades Taiwan. Plus, the World Economic Forum in Davos kicks off. Stay tuned for an outstanding lineup of interviews, including the chief executives of Mahindra & Mahindra and Standard Chartered. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacroix, day one in Davos. Now, the U.S. has reached a trade deal with Asian economies. The pact brings together countries worth 41% of global GDP.
The United States is deeply invested in the Indo-Pacific. We're committed for the long haul, ready to champion our vision for a positive future for the region, together with friends and partners, including the nations in this room. That's how I believe we will win the competition of the 21st century together.
Now for more, we're joined by Bloomberg's chief Asia economics correspondent, Enda Curran. So Enda, what more can you tell us about this deal?
Well, we're getting some meat in the bones of this kind of framework now, Francine. There's about a dozen members in it, some big economies like India, Japan, South Korea, then around 7 from Southeast Asia. There are 4 pillars to it that will include topics such as resilience, so preparation for the next economic shock or disaster. There's a focus on the digital technology and on climate change, among others. Now, that's the kind of outline of it. We don't have much more detail beyond that just yet. For example, it doesn't deal in areas such as bringing down tariffs or trade barriers. That's not part of what this is about. And of course, we don't yet know how much political support it will get on the US side of things either. The details of this will be worked out over the coming weeks and months in terms of which country is going to sign on to exactly what part of this agreement. It's kind of a US effort to get going again in the region after pulling out of TPP back in 2017. It's their way of countering China's economic weight. Of course, China is saying this is another divisive measure by the US. So, as I say, it's some detail on its initial idea by the Biden administration, but probably has a way to go yet before we have a full idea of how it will operate and what it will mean economically.
All right, Enda, thank you so much. Enda Curran there with the very latest, of course, on all of this region and the intricacies and interlinks between them. Coming up, Volkswagen and Mahindra are aiming to electrify the Indian autos market. We'll be live in Davos with the managing director of Mahindra & Mahindra, Anish Shah, about their plans. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Davos. Now, Credit Suisse Chief Executive Thomas Gottstein says he has a clear mandate from the board to continue in his position. Gottstein has come under pressure because of a string of scandals. He was speaking to me a bit earlier on, and here's what he had to say.
With the high inflation shocks that we see now in certain areas of this world, it's very clear that people are somewhat insecure, they are in risk-off mode. But Our house view still is that there won't be a recession, neither this year nor next year. There will be a slowdown. I think our house view global GDP is 3.3% for this year and 2.9% for next year. They have come down. And if you look at certain markets, whether it's equity markets or high yield markets, they have clearly come under pressure.
I mean, under pressure, they've been a bit crazy.
Yeah, well, they're basically been pretty quiet, let's put it this way. But our clients, they don't panic. You know, they are looking at how things develop. And they stay engaged, and that's very important for our wealth management clients and our wealth management relationship managers, that they stay in front of the clients, and that's what I'm really focused on.
So there's no, you're not seeing any outflows. They're still fully invested.
Well, what we did see, like many of our competitors, is some deleveraging as part of asset under management going down, certain equity prices going down. But some deleveraging, especially in Asia. And obviously with what happened in Russia and in some other parts, that AUM have gone down, but no outflows as such, no.
Does it actually hurt your ability to collect some of the fees in certain parts of the markets with some of your wealthy clients, or not so much?
Well, if you look at our three revenue streams, so net interest has come under pressure because we had lower lending volumes. But now with interest rates going up, that should be a positive element going forward. Recurring revenues have also come down because of lower AUMs. And transactional revenues actually have started to stabilize now. Volatility sometimes is a good thing for transactional revenues, so have started to pick up. But it's clear that 2022 will be at lower levels than last year.
That was the Credit Suisse Chief Executive Thomas Gottstein speaking to me a bit earlier on here in Davos. Now let's stay in Davos, and we're at the World Economic Forum. Earlier we also spoke to the forum's managing director about, of course, what she's expecting in the next 4 days. She's Sadia Zahidi.
More than 2,000 leaders coming together again 2.5 years after the last time that we met. I think there is a lot of demand for starting to rebuild bridges, cooperating again, the serendipity of connection between people. Of course, so much work has continued here at the forum in the virtual world as well, but this is the moment to actually really lock that down.
I mean, the star power that we had in the past doesn't seem to be showing up this year. Does that change the way you work?
50 heads of state, 50 ministers of finance and central banks, and the economy is one of the key topics. So I think we've got really the right set of people to make this the right kind of serious working meeting to ensure that we make progress on the issues that matter today.
What do you say to the critics that say, look, Davos is very nice, but it's all the elite, they come together, they talk, but there's never anything concrete that comes out of it?
Look, day one, right? We're going to have President Zelensky speaking to kick off this meeting. And then 2 days later, we've got over 100 CEOs coming together with all of the Ukrainian government leaders and young people that are here in person to start working already on what it is that they could do to support Ukrainian refugees in Europe, and at the same time start thinking now about a sort of Marshall Plan for rebuilding Ukraine in the future. That is the type of thing that will be happening here at this meeting. And of course, I can give you several examples from reskilling, jobs, climate, so much that moves forward. But of course, it doesn't sort of, start at this meeting and it doesn't end at the meeting. It's ongoing sets of work.
So you have Ukraine, you have, of course, inflation concern, economic concerns, you have climate change. What do you think the biggest worry right now is for a lot of the elites, maybe away from the war in Ukraine?
I think a big focus is going to be the economy, right? So if we just look under some of the technical terms that we're all focused on, what this means right now is a cost of living crisis. What we're talking about here is a real impact on people's lives and livelihoods. We have, after a very long time, a major risk of famine, of hunger, of starvation, and making it very difficult for people to make ends meet. So a big part of that will be the focus here. How do we ensure that we not just get emergency aid to those that need it, but also how do we get this system rewired so that we don't have these issues in the future?
That was the WEF Managing Director, Sadia Zahidi. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Sources tell Bloomberg that Broadcom is in talks to buy cloud computing company VMware. The chipmaker has been making a series of purchases as it looks to expand the business into one of the largest and most diversified in the industry. VMware has a market value of about $40 billion. Now, the FT is reporting that HSBC has suspended an executive after he downplayed the risks of climate change. Stuart Kirk is the head of responsible investing for the bank's asset management unit. He criticized HSBC for paying too much attention to climate and other environmental and social issues. The HSBC CEO Noel Quinn says his remarks are inconsistent with the bank's strategy and do not reflect the views of senior management. And Saudi Arabia's sovereign wealth fund has bought a 17% stake in Prince Al Walid's investment company for $1.5 billion. Al Walid will retain a 78% stake in Kingdom Holdings, while the remaining 5% will be listed on the Saudi bourse. The investment brings the billionaire prince closer to the Saudi government after years of operating independently. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Now, we're here in Davos, day one. We have 4 days. A lot of the conversation will be on a possible Marshall Plan for, of course, Ukraine. We'll talk about inflation. We'll talk about recession. We'll talk about everything in between, which is the inequality out there in the world. But I'm delighted now to be joined by the Standard Chartered Chief Executive Officer, Bill Winters, for a robust conversation on the economy and what we should be worrying about. Well, Bill, as always, thank you so much for joining us. Last time I saw you in Davos was January 2020.
Yeah.
It was right at the beginning of COVID-19. And now they're back, and it feels like the world has really changed.
Yeah.
Do you worry about a recession? How much do you worry about the cost of living?
I worry about a recession, and I worry about the cost of living, and the two things are clearly linked. But I'm pretty encouraged by the overall level of economic activity, which remains robust. And I know that central banks have some really heavy lifting to do in order to get inflation back under control. It's clearly going the wrong direction right now. And the likelihood that translates into a material economic slowdown is high. Does it tip us into recession? I know, everybody will have their view.
But Bill, so, I mean, is there anything that banks actually can do to alleviate that? Or is it up to governments? Like, it's unclear whose responsibility after 2 years of COVID it is now.
Well, I think the responsibility for inflation is squarely with central banks. And to the extent that they're able to exercise that responsibility, there will be higher interest rates, and that will lead to lower economic growth. I think that's inevitable. That is the transmission mechanism. No getting around it. But I think there's a real question whether, when push comes to shove, whether the Fed and others really go all in on the inflation containment versus maintaining a level of economic growth. And we'll see.
Do you think there's a policy mistake in the making from central banks?
I don't think there's one in the making. I think we can all speculate on whether central banks should have moved earlier. But we know that there's been a series of supply shocks as well that have taken place that the central banks realistically couldn't have forecast. But yeah, clearly, the confluence of events right now is to make the central banker's job very, very hard.
Bill, if we do have a recession, I mean, you've lived through the global financial crisis. Would it be different from that? Is it more like an 80s pattern? Because we talk about recession, but actually recessions are all different.
I think that the really big difference between recessions is, does it trigger a financial crisis or does it not? And thankfully this time I'm pretty sure that there would not be a financial crisis because the financial system is extraordinarily strong. So we obviously got a lot of things right after the financial crisis, not least increasing bank capital levels, liquidity levels, fewer places in the non-banking sector to hide. And that's very encouraging. So I think the likelihood that a slower economic growth translates through to a credit crisis / financial crisis is very low. And typically when you have recessions or credit cycles that aren't linked to a financial crisis, it's not so severe. So I would hope that if we do go into recession, it feels like it's a dip in growth coming back out rather than something more structural.
I mean, this morning we also had this agreement, this accord between the U.S. and 13 Asian nations to have a trade pact. I don't know whether this means that we're going to see more globalization in certain parts of the world and deglobalization in other parts of the world, but how does it change how you run your bank?
There's certainly shifting trade patterns, and I would say broadly these are good things for Standard Chartered Bank. There's much more intra-Asian trade and trade amongst the global South, which is our natural, those are our home markets. At the same time, we know for sure there's going to be onshoring into the U.S. and Europe, both for security of supply, but also for job creation. We can look at the unemployment rate and say, how much job creation do we need? But we know that nevertheless, high-quality jobs is a priority. So we're in a state of flux, and I can see some very good things for the global economy. I can see some things that will lead to further inflation. Yeah. But all this onshoring and domestic sourcing of supply is inflationary. Yeah. It's structurally inflationary, which makes the central banker's job ever harder. But perhaps it's for the best in terms of getting a stable geopolitical environment.
Bill, if you look at HSBC and, of course, one of their main shareholders paying out trying to break up the bank, I mean, how do you look at it from what it could mean for Standard Chartered? Look, we're totally focused on just running our business. We're having a very good time right now. Trade is increasing. We've got the bit of a tailwind of higher interest rates. Credit quality for our bank has been very good, and income growth is strong. So we feel our strategy, as we've got it articulated, and we're very specific in the guidance that we gave the market back in February, it's working. That strategy is working. I'm skeptical of sort of these inorganic solutions where you end up taking something that is a reasonably well-functioning integrated whole and splitting it up in pieces. I think that certainly for Standard Chartered Bank, the cost would be much greater than the benefit. But thankfully, nobody's suggesting that in our case. I mean, do you see Standard Chartered evolving? I know you've been in charge, what, 7 years? Did you get it to where it needs to be, or do you see it, changing a lot more from where it's now? We've been pretty consistent with, certainly for the past 5 years or so. We had a couple of years of cleanup when I arrived. For the past 5 years, we've been focusing on growing our cross-border corporate business, growing our proposition to affluent customers, digitizing everything that we do, and then more recently, a real focus on sustainable finance. Those 4 things have stood us in very good stead. So we definitely took a step back during the pandemic as a result of mostly lower interest rates, 0 interest rates. As interest rates are normalizing, we're right back on track. We've got a high degree of confidence that we can hit our financial targets. We set a very specific target for 2024. My comment when we rolled this out in February was, if not earlier, okay, which obviously means next year. And you're sticking to that? If not earlier? You think it'll be earlier? I hope so. I hope so. I mean, the guidance is the guidance. 2024 is what we're shooting for. But yeah, interest rates are going up a little bit faster than the market had expected, even when we spoke. And the business still feels good. Bill, thank you so much for joining us here in Davos. Bill Winters there, the Standard Chartered Chief Executive Officer. I'm not crying because of what Bill is saying. It is very, very bright here in Davos. Coming up, Volkswagen and Mahindra are aiming to electrify the Indian autos market. We'll be live with the Chief Executive of Mahindra & Mahindra, Anish Shah, next. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, in London, Davos. It's the sun, it's not the sun. I mean, Volkswagen exploring the possibility of supplying electric vehicle parts to Mahindra & Mahindra as the German automaker looks to tap into the enormous growth potential of the Indian market. And here we have a good conversation, of course, about a very successful global business and what they need to do to go into the next step.
You're right, and when you talk about India, this is the 5th largest auto market in the world. So it is important where India goes from here when it comes to EVs.
Yeah, and we have a great guest to talk about this.
Exactly. Anisha, good to have you with us, CEO of Mahindra & Mahindra. Anish, good to have you with us. We talk about this drive towards EV. I mean, it is a huge market in India, but, you know, one of the criticisms against Mahindra & Mahindra is that perhaps your EVs are not at global standards. How are you rectifying that to ensure the adoption and perhaps it attracts, you know, the global markets?
So, Aslida, it's a pleasure to be here with you, and obviously beautiful in Davos this time. It's always pretty in winter as well, but we don't have to worry about the snow and the ice, so it's
and
lovely
the snow
here.
boots.
And the snow boots, yes, of course. So with regard to EV, I'm going to first talk about three-wheelers, because EV does tend to focus a lot on the four-wheelers only, but there's a huge set of things around it, three-wheelers, commercial vehicles, and so on. In three-wheelers today, we've managed to get everything that's required for the consumer. Low cost of operations, range anxiety being addressed, and the infrastructure that's required, because swapping in three-wheelers is easy. And from that perspective, that market's going to take off very quickly. Mahindra today has a 70% share. We've made ICE three-wheelers as well, and we've seen that transition go from 25% of our vehicles being EV in three-wheelers to 70% in our portfolio as well.
So in terms of market share, what are you looking for? What are you targeting 2 to 5 years, realistically?
So on three-wheelers, we will continue to maintain the market share we have. It may come down a bit with competition coming in, but we do expect to have at least over 50% as we go on. On the four-wheeler side, we do expect to get leadership back. And if I were to answer your question directly, yes, the cars, we've been making EVs since 2008, but they were with old technology. And the market in India has taken slow to develop. It's taken a little more time for a variety of reasons. But we are seeing India at the cusp of embracing EVs and moving forward. And we have very exciting plans for a whole range of world-class EVs that will be launched in the next 2 to 3 years. We have a huge reveal that's planned later this summer.
Who's your biggest rival? What do you think of Elon Musk?
Our rivals are around the world. And if you go back 20 years, Indian manufacturing was written off because we had all the global manufacturers coming into India, and we survived and thrived. And if I were to just give an example of a world-class car in ICE, we launched the XUV 700 a few months ago, and we sold 50,000 cars in 3 hours, which is a global automotive record. And we have 11,000 bookings every month since then. So we have the ability to make world-class cars. We managed to compete very well with everyone who's come in from outside India, because we managed to deliver cars that the Indian consumer wants. And that's something we feel confident about as we get into EVs as well.
It is about supply chain disruptions. It is about chips. Automakers have been hard hit. When will we see an easing? When will we see the end of this chip shortage?
So the world as we see it today is going to have one challenge after the other. So that's one thing COVID has taught us, is find a way to deal with it, be resilient. Today, chip shortages have eased significantly. So they impact about 10 to 15% of our production overall. And that's something we've been able to manage with a variety of things that we put in place. But there will be challenges that come up. It's supply chain impact due to the Russia-Ukraine crisis. Yeah. It's China lockdowns impacting us as well. So it's a whole host of things, and we're working through those.
More challenges, so you're expecting more challenges to come at the forefront?
The way the world's going over the last few years, yes, there are more challenges we're expecting. We don't know what they are today, but that's something we'll just have to be ready for.
India's economy is slowing, but still 6% growth. I mean, inflation is surging. How do you think it all can be fixed, and how will it impact companies like Mahindra & Mahindra?
So India is positioned very well in the world today because inflation hasn't gone up as much as compared to the Western markets. Yes, we've seen an uptick, but it's 200, 300 basis points. I would not expect a significant rise in rates. RBI, the Indian Central Bank, has been proactive in taking action already, and we don't see a significant decrease in demand. We've had commodity prices go up over the last 2 or 3 years, and despite that, we've seen good demand for automobile, tractors, our hospitality business, real estate business. So things have been very strong. So from that standpoint, I would say fairly optimistic about India, despite the challenges around. A level of caution there as well, but overall pretty good.
Sir, thank you so much for joining us. Anish Shah, there, Managing Director of Mahindra & Mahindra, joining us today. Also, thank you to Haslinda. I love Davos because I get to catch up with Has. Bloomberg Surveillance Early Edition continues in the next hour. We'll have plenty more from Davos throughout the day. Tomorrow, an exclusive interview with the ECB President Christine Lagarde. You don't want to miss that one, but we'll have plenty more all week. This is Bloomberg.
Of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali, sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 itu nyampe dapat jualan, bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu, sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
look, Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
We have to navigate the next few months. We need to navigate the rising rate environment.
I still think that the capitulation is to come.
When every single headline is negative, it's time to buy.
I still think the worst is not behind us.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Monday, May 23rd. Our top stories today. U.S. stock futures rose after the S&P 500 narrowly missed a bear market close. Still, a new survey of finance professionals sees the index losing another 10% before bottoming out. President Biden says the U.S. military would defend Taiwan if China attacks. Meanwhile, the president is reconsidering tariffs imposed on China during the Trump administration. And the Davos Forum is back with fewer Russians and billionaires and no snow. But we will hear from the CEO of the Hong Kong Exchange and the chairman of the State Bank of India. A very warm welcome to the programme, everybody. This is Bloomberg Surveillance Early Edition. I'm Anna Edwards, live in London with Chrissy Gupta and Kaylee Lines over in New York. Matt Miller is off today. And Kaylee, European equity markets certainly looked suspiciously positive earlier on this session. Some of that positivity, though, has wound back a little bit as we've gone through the first couple of hours.
Yeah, and you've seen some of the gains for futures winding down as well as we get closer to the opening bell, Anna. But of course, it's still about 4.5 hours away here in the U.S., so we'll have to see how things shake out. As for how things were shaking out in Asia overnight, it really was a mixed session. Overall, you had the MSCI Asia Pacific Index up by about 1/3%. Markets like Japan were higher, but both Hong Kong and China ended the day in the red. There's a couple of competing factors here. On the one hand, you have COVID-19 and a record number of cases being reported in Beijing. That raises concerns once again of a potential lockdown in the Chinese capital. So that was weighing on Chinese equities overnight. You saw that reflected in a 0.6% decline for the CSI 300. But on the other hand, perhaps brighter news is President Biden on his trip in Asia saying that when he gets back, he will discuss those tariffs on Chinese imports with Treasury Secretary Janet Yellen. So that providing a sentiment boost to the Chinese currency. The yuan, the big outperformer in Asian FX today, stronger against the dollar by about 0.4%. We're trading right around that 667 level. And then finally, I would note, while you are seeing a bid into a lot of global bond markets, you actually were still seeing selling pressure evident in New Zealand, specifically at the short end of the curve, up about 4 basis points on the 2-year to 314. Of course, New Zealand's RBNZ will be deciding on Wednesday. Creedy, the market is bracing for a 50 basis point rate hike.
We'll certainly have our eye on that for now, Kaylee. But let's take a look at those pre-market trading here in the U.S. session, because you are seeing green on the screen. Now, remember, some of this is going to be purely a technical bounce. We did hit that intraday bear market as of Friday, but I guess some of the concern here is that we didn't close in bear market territory. So in terms of technical definitions, is that bounce really justified? Nevertheless, you have it up 0.4%. How much of that is the tariff conversation you were just referring to, Kaylee? How much of that is simply the gains on this idea that perhaps you are seeing a little bit of a weakening dollar against the yuan? You are also seeing some of these other kind of mostly recession talk perhaps wind down as more and more people say this is the dip to buy. Of course, we'll hit that throughout the program as well. Let's look at this cross-asset picture. The 10-year yield hovering around 281 basis points, up 3 basis points from where it was on Friday. You're also seeing some green on screen when it comes to crude, up 0.5%. Bitcoin up 1.3%. But Anna, when it comes to this cross-asset picture, put this in the context of volatility. This is actually a muted picture compared to what we've seen in the last couple of weeks and arguably months.
Yeah, indeed. And Chrissy, here in Europe, we're a little more muted than we were at the start of the trading day. So 2 hours ago, we were much more positive across European equity markets, perhaps reflecting a little bit of the positivity over in the US on Friday. At the end of the session, the option markets expiring, all the excitement attached to that. But then we also had US futures pointing a little bit higher than they do now. So both of those measures of risk appetite dialed back a little bit. The CAC 40 and the FTSE MIB in France and in Italy taking the worst of the losses in Europe today. But we're kind of mixed then across this European equity market picture. In terms of where we are on the individual assets on the move, I can tell you that the energy sector is one sector that is benefiting today from some risk appetite and indeed from higher energy prices. So as that oil price remains fairly buoyant, we see the Stock 600 energy sector up by 1.4%. Basic resources, the mining sector, also moving higher. Talking of energy, this is a renewable energy business, a wind turbines business. That stock up by 6.5%. Siemens Gamesa, because Siemens Energy is going to buy the part of this business, or they want to, that they don't already own. A follow follow-up on a Bloomberg scoop from last week. Here's the euro, up by 0.9% for the euro against the dollar. We've heard from Christine Lagarde saying she thinks we're going to get to the end of negative interest rates in Europe by September. That means 225 basis points in July and September. That's what you could read into that statement. And so the euro goes higher as a result. We're going to be speaking to Christine Lagarde exclusively from the Davos Forum, of course. That's going to be tomorrow during the early part of the European day. And the pound also up by 0.8%. A lot to watch here in terms of the underlying economics. Andrew Bailey of the Bank of England will be speaking later. Also focus on the politics. We'll get that civil servant report into those so-called Partygate gatherings that were happening at Downing Street during the pandemic, Kaylee.
All right, Anna, well, in addition to those comments from Andrew Bailey, there is a lot else going on today and, of course, throughout this week, including, as you mentioned, the World Economic Forum taking place in Davos, Switzerland, although the snow is replaced for a little bit more sunshine in this May meeting. Then on Tuesday, we'll get PMI data from Europe as well as the U.S. Plus, Twitter will be holding its annual general meeting on Wednesday when shareholders are expected to vote on Elon Musk's $44 billion takeover offer for the company. Also on Wednesday, Fed minutes will be released. What kind of insight will we be getting into the thinking of the FOMC? And finally, on Thursday, Alibaba will be reporting its earnings results. Creedy.
Yeah, let's stick with that market theme here and go a little bit broader with the S&P 500 flirting with a bear market last week and notching more than $1 trillion in losses. Participants in the latest MLive Pulse survey see more pain to come. Bloomberg's Danny Berger has the details. Danny, break it down for us. Is this the bottom?
Well, only 4% of respondents in our MLive survey said that it was the bottom. This is of more than 1,000 professionals. So judging based off that sentiment, Critty, I've got bad news for you. Now, the average of those respondents said that they think the bottom will be around 3,500. 26 put it in about a 200 point range. Beyond that, that would indicate a 10% decline from Friday's levels, a 27% decline from January's level. Look, it's this don't fight the Fed mantra. They want to tighten financial conditions to get inflation in check. And of course, falling stock markets, that's something that surely helps tighten financial conditions. Although something that could get even worse, some respondents, a handful of them, saw us hitting the low of the pandemic. Now, in terms of what lifts us out of the bottom, in terms of what gets this economy really going, the responses there were pretty broad, they're pretty macro, and perhaps don't offer too much help. Because let me dig into it. The Fed ending the hiking cycle, that was one thing that would provide an economic boost, but that's definitely not a 2022 story. There's 27% saying China ending COVID zero. There's no sight an end for that, at least for now. And then the last two that were most commonly cited, lower oil and peace in Ukraine, both of those, and at this point, just very unknown.
Danny, thanks very much for the update. Danny Berger on the equity markets. Now, the U.S. says a dozen countries in the Indo-Pacific will join a sweeping economic initiative designed to counter Chinese influence in the region. According to the White House, the nations involved in this framework constitute roughly 40% of global GDP. Meanwhile, President Biden says he'll be talking about U.S. tariffs on Chinese imports with Treasury Secretary Janet Yellen when he gets home from his Asia trip. For more, we're joined by Bloomberg's Chief Asia Economics correspondent Enda Curran. Enda, first on this agreement between 14 or so countries, the U.S. stepping back into the Asian trade sphere, I suppose, post the Trump administration.
Yeah, it's early stages, and still a lot of detail to come on this. But as you say, the idea is that the U.S. is trying to get back on the trade story here after they pulled out of the TPP back in 2017. This latest idea, the Indo-Pacific Economic Framework, is meant to bring together, as you mentioned, about a dozen countries. There are 4 pillars in it. It's going to cover areas such as, obviously, climate change, the digital economy, resilience, which is all about preparing economies for future shocks and disasters. That's the kind of headline, but this isn't a formal trade agreement. There's nothing here about reducing tariffs or anything like that. And of course, it's not yet clear whether or not it can get enough political support back in the US. There is opposition in Congress to this latest initiative too. So it's more of a headline push by the US to try and get back in the trade story in Asia rather than anything significant. And as you mentioned, the bigger story today might be that President Biden has acknowledged they may roll back some of those tariffs on Chinese goods.
Well, and that's not the only commentary we got out of President Biden, Enda. He also used some of his strongest language yet on Taiwan specifically. He was speaking at a press briefing in Tokyo and said that the U.S. military would intervene to defend Taiwan in any attack from China. Take a listen.
Are you willing to get involved militarily to defend Taiwan if it comes to that?
Yes.
You are?
That's a commitment we made.
All right, so the president being pretty clear on that, and I can't imagine China will like it.
No, China has already pushed back against these remarks, in fact, calling them deplorable, as China consistently does when it comes to US commentary on Taiwan. In that press conference, President Biden's remark, as you just heard there, was obviously quite hawkish, but he also went on to say that the US still sticks with the one China policy. There's no change to the US approach to Taiwan, and indeed his staff afterwards are making the point that this is all about giving aid to Taiwan in the event of an invasion, military aid, for example, rather than sending boots on the ground. So it's not really clear what this changes. It's obviously a hawkish statement. It certainly won't go towards helping or reconciling US-China relations, but I think we'll need to hear more from President Biden during the course of his Asia trip as to whether he wants to clarify these remarks further.
Bloomberg's Enda Curran, thank you as always from joining us. And from Hong Kong, let's go to Davos, where executives, politicians, and central bankers are meeting over the next 4 days at the first in-person World Economic Forum in 2 years. Bloomberg's Haslinda Amin is there and joins us now with the Hong Kong Exchange CEO. Haslinda.
And Kriti, it is a windy Davos right now. The hair's blowing all over, but never mind that. As you said, the Hong Kong Exchange CEO is with us, Nicholas Aguzin. good to have you with us. I mean, Hong Kong has been slammed by the COVID restrictions imposed by China. We have your IPO market getting hit in a big way at the lowest level in about 9 years. Do you expect things to pick up the rest of the year?
Yeah. Well, what I'd like to look at usually is how's the pipeline? Are companies actually coming out and submitting their filings, their applications? And right now we have between 170 to 180 applications of people that have shown an interest to file for their IPOs. What's happening, I think it's not that related to COVID as much, but like to the environment, the economic environment, and the fact that valuation seems to be a little bit like down and soft. And so people are interested, they're filing. We have almost record level of filing applications, but they still haven't pulled the trigger in a significant way.
When do you expect the trigger to be pulled? Because right now it is impacting your earnings. In fact, you're looking at earnings at the lowest level in 5 years. When do you see a reversal of that? When can you grow that again?
Yeah. Well, last year we had record earnings. I mean, it was all-time record. I mean, so when we look at the numbers are actually quite good if we look at the last 5 years. And what we see is that the general sentiment has lowered the amount of trading that happened. I mean, there's less trading, and at the same time, valuations are lower. So what we see is that eventually the market will come back. It always has. I mean, there's like periods where valuation seems a little bit lower, then they pick up. So, I mean, this time will pass. I cannot predict whether that's 2 months, 6 months, 7 months. What I know is that if I take a bit of a longer term approach and I look at 5, 10 years, the opportunities around China and capital markets are great.
It's been challenging for you the past 1 year. In fact, you took over as CEO of Hong Kong Exchange almost 1 year to the day, 24th of May. You did a trip to China in April. What was the conversation like? What was the message you sent across to China?
Yeah, we have a lot of stakeholders in China. We have a lot of partnerships. We forged some new partnerships, like with the China Climate Exchange. I mean, and so there's a lot of like positive interactions that we have. Now, the key message that I heard is around the importance of Hong Kong developing and continuing to develop as a key international financial center. I mean, a global international financial center with preeminence. So that is very important, and that was, very, very clear. We have a unique role as the most international city of China and the most Chinese city outside of the mainland.
More cross-border projects expected?
Yeah, I mean, I think there is increasing, the opening up of China will continue.
I want to touch on the LME, the volatility that we saw on that fateful day, prompting the likes of Ken Griffin to say that, it was the worst day he's had in his entire career. You endorsed the CEO, Matt Chamberlain, yet again, and you said that you agreed with how it was managed. But having said that, 3 investigations are ongoing right now, looking at whether or not something had been done wrong. If it's proven that something wrong was done, would you take personal responsibility for it?
Yeah, I mean, clearly it was a very difficult moment for the commodity markets, and there was a lot of tension around that time and those few days. I do think that the decisions that the management of LME took, the executive management took around that time, were in the interest of the market as a whole, and considering that. And so, I mean, I have to, endorse the decisions that they've taken because they were thinking about the overall market.
Is there something LME could have done that it didn't do on hindsight?
A lot of the reviews, independent reviews that are taking place at this point, we'll see if there are things that could have been done better. Of course, we support evaluating the market as a whole, how the market operates, what are the changes that could be done in terms of market structure. But I mean, I do believe that if there's something to be done, we'll do it.
What can be done to regain investor confidence at this point?
We have to make sure that the market is, a trustworthy market, and that there's confidence in the type of investors that we have, in the type of products that we're delivering, and that will take some time because, I mean, there's a lot of things that are being done around that area.
Investigations are being done even by the Bank of England. Do you expect changes, a tightening of any sort as a result of that investigation?
I mean, the reviews that are carried out, including some reviews that we are carrying out, I mean, are with the objective of trying to see how we can make the market better. I mean, that's a key focus.
Quicho, the markets have been slammed, to say the least. 7 weeks of declines. Is that a reflection of how investors view the global economy? What's your take on it?
It's interesting that we're now here in Davos after more than 2 years that we couldn't attend in person. And if I look back at the last Davos and today, I mean, at that point, we didn't have any COVID, really. We didn't have any of the, situations around the conflicts of Ukraine and Russia. It was the inflationary pressures were not there at that point. So we do have a complicated global macro environment. It is very soft in terms of the outlook of many investors, and the market is just reflecting that.
It's complicated for Jerome Powell trying to navigate this soft landing. Do you think he can have a soft landing?
I think that the inflationary pressures will continue for some time.
Nicholas Agusin, always good to have you with us.
Thank you very much.
Finally, we made it. And that was the CEO of Hong Kong Exchange, Nicholas Agusin there. Back to you guys.
All right, Bloomberg's Haas Linda Aman in Davos with the Hong Kong Exchange CEO. Thank you so much. And of course, Haas will be back with us later on this hour. First, though, we want to take a look at some stocks moving in pre-market trading here in the U.S. And really, there is one story that is capturing attention this morning. Not necessarily Merger Monday, but at least Merger Talks Monday. Bloomberg reporting overnight that Broadcom is in talks to acquire VMware, which is a cloud computing company, would be part of Broadcom's push to expand into that highly specialized area of software. Now, according to our reporting, the talks are ongoing. There's no guarantee a deal will happen. Also, not sure what the offer price would be. But remember, VMware is a $40 billion company. So if you assume the typical premium that is put in place on deals like these, this could be a really, really large one. And you are seeing that reflected in pre-market trading this morning. VMware surging 18% in early hours, trading at about $113 a share. Broadcom, on the other hand, is slightly lower in the pre-market trade, down about 2.5%, Anna.
Kaylee, coming up on the program, more from Davos. Dinesh Kara, State Bank of India chairman, will be joining us. We'll also talk to Steve Yackiston, Saxo Bank's CIO. That's coming up in this hour. He says the economic agenda is moving to a better and more rational place. We'll get details. This is Bloomberg.
companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Kriti Gupta and Kaylee Lyons in New York. Matt Miller is off today. Let's get to market analysis. Noor Al-Ali, Bloomberg Markets Live Editor, joins us here in London. Noor, really nice to have you with us. We started off with some sort of appetite for risk assets, stocks moving higher in Europe. That's faded a little bit. Something that's been pretty consistent and has intensified has been dollar weakness this morning. And yes, we've got some additional lines on the euro that add to strength there. But why the real focus on dollar weakness, do you think?
You know, it's a lot of headwinds that are coming the dollar's way. Definitely, we're now starting to seeing a lot of central banks playing catch up with the Fed, which could potentially add pressure on the dollar, because there is the narrative that perhaps the Fed has maybe, waited too long to raise rates. You do have potentially even lifting the tariffs on China, even though we're in early talks there. Could add another stressor on the dollar versus the yuan, now the euro as well. You do have a lot that's going on against the dollar, which is why we're seeing some weakness.
Noor, talk to us a little bit about the ripple effects of that dollar weakness. When you think a weaker dollar, immediately what comes to mind is higher commodities, but there are broader implications as well. Walk us through them.
I think about gold, Kriti, and I think that's a really good question, because there is that cross-asset implication here. Gold has been gaining strength, on the back of a weaker dollar. I don't know if that's going to last, though. I do think that gold, in of itself, has a stronger correlation with rates, and we've seen that relationship and the strength of that relationship perhaps could give us a better insight on what gold goes into. So if you're in the camp that thinks higher rates are up ahead, then you're probably in the same camp that thinks gold is not going to sustain this rally.
Well, on the subject of higher rates, you also had ECB President Christine Lagarde saying that negative rates will be over by the end of the third quarter. How are we seeing the market react to that?
I think the market is finally saying, finally. I mean, we've already seen this. We've already been pricing this. Money markets have been pricing in higher, have been betting on higher interest rates. On the Bloomberg Terminal, you can see this through the function WRP. It's a fantastic function, apologies. And I think what's really interesting about this is that you've seen a bit of a bounce for the euro. Yields maybe rose a little bit, but the reaction hasn't been as vast. This is predominantly finally, because markets have already been pricing this in, and finally the ECB is reacting to what the market has been seeing. I mean, at this point, will we be in a recession? I think that's what's on everyone's mind, and that's why you've seen stocks also fade slightly in this morning.
All right, Noor Ali of Bloomberg Markets Live, thank you so much for joining us. Now, keeping you up to date with news from around the world, here's the first word. The International Monetary Fund is warning against global economic fragmentation stemming from the war in Ukraine. It says that undoing decades of integration will make the world poorer and more dangerous. IMF Managing Director Kristalina Georgieva says nations should lower trade barriers to alleviate shortages and lower prices. President Biden is seeking to reassure Americans about the current monkeypox outbreak. At a news conference in Tokyo, the president said it was unlikely to cause a pandemic on the scale of the coronavirus. He said the U.S. has enough smallpox vaccines stockpiled to deal with the outbreak. In Australia, the Labour Party's Anthony Albanese has been sworn in as Prime Minister. Albanese defeated Prime Minister Scott Morrison in an election held on Saturday. He's promising swift action on climate change, greater gender equality, and improved wage growth. And in New York, police are searching for a man who shot and killed a Goldman Sachs employee on a subway train. Daniel Enriquez was 48 and had worked for Goldman since 2013. Goldman calls the death a senseless tragedy. An increase in assaults on New York's subway system has prompted Mayor Eric Adams to boost the number of officers on patrol. And of course, Anna, it was not so long ago that we saw the mass shooting on a subway train in Brooklyn, New York. It really goes to show the challenges of not just crime in New York, but also as banks, Wall Street in particular, and companies across the board are pushing people to return to the office, having to do so in public transport. This feeds into whether or not people really want to do that.
Yeah, adds into the return to office debate. Tragic news there. Coming up on this program, we'll get back to Davos. We'll bring you an interview with the State Bank of India chairman. This is Bloomberg.
Estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones, nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. US stock futures rose after the S&P 500 narrowly missed a bear market close. Still, a new survey of finance professionals sees the index losing at least another 10% before bottoming out. President Biden said the US military would intervene to defend Taiwan in any attack from China. Those comments appeared to break the long-standing US policy of so-called strategic ambiguity, but then those comments were later walked back by the White House. And the Davos Forum is back after a 2-year pandemic-enforced hiatus. There are fewer Russians and fewer billionaires and no snow, but we will hear from the chairman of the State Bank of India in just a few moments' time. Good morning, everybody. I'm Anna Edwards in London with Kriti Gupta and Kaylee Lyons over in New York. Matt Miller is off today. And risk assets, Kriti, then just losing a little of their momentum as we've gone through the first couple of hours of the European trading day.
Yeah, and I can remember waking up and actually seeing stocks, futures up over, I think, 1.5%. You have certainly seen some of that steam roll out of the markets. But I think an important part of the equation is that whether this is fundamental or whether this is technical, because remember, we did, as you pointed out, hit that intraday bear market on Friday, but we did not close in bear market territory. And that seems to be the loophole, if you will, on the technical basis. That nevertheless, you did see a bounce back just given the volatility of last week. And I believe that wraps up 7 weeks of losses. So once again, in that context, natural to see some green on the screen. There is a fundamental driver as well. You did have President Biden reiterate, remember, he has made these comments before, that they are considering potentially looking at some of the tariffs against China. Remember, that has been a major kind of contributor to inflation in terms of import costs, especially for, say, producers or factory owners. That's something to keep in mind. But nevertheless, take a look at the cross-asset picture here, because the 10-year yield at 282 basis points, up about 4 basis points here from the Friday session. Also keep in mind, though, the dollar actually weaker to the tune of 0.7%. Compare that to the yields picture. You're seeing that divergence, which we usually don't see. That tells you that one of the two is likely going to snap back. Also keep an eye on Bitcoin, up 1.5%, Kaylee.
All right, Kriti. Well, I also am keeping an eye on some maybe potential deal news today, or at least reports of deal talks between Broadcom and VMware. Of course, Broadcom, the big chip maker, VMware, the cloud computing company, it would be a part of Broadcom's push into specialized software. As a result, you are seeing VMware surging in early hours. It's up about 19%, trading around $114 a share. Remember, this is a company worth about $40 billion in market valuation, so interesting to see if this deal does go through, which according to our reporting is no guarantee what kind of premium will be put on the stock. Broadcom, on the other hand, down about 3.4% in early hours trading. And of course, another story we continue to focus is the monkeypox outbreak here in the U.S. President Biden says, don't worry, it won't be a pandemic on the scale of COVID-19, but nonetheless, you are still seeing some areas of the market reacting to it, specifically those stocks of companies that make therapies to combat viral outbreaks. That includes SIGA Technologies. It's up 38% in the early hours trade. You also have Cimerix up by about 21% before the bell, Anna.
And of course, monkeypox is a topic of conversation in parts of Asia and here in Europe as well, Kaylee. We are seeing those strengths to European equities, not as much as we were seeing earlier on, as I was just discussing with Kriti, but we are seeing them stronger this morning, up by 0.4% in aggregate on the Stoxx 600. Kaylee was just talking about a bit of M&A in the United States. Well, there's some of that here in Europe as well. This is Siemens Gamesa, which is a wind turbines business based in Spain. Their big shareholder, which is Siemens Energy, has decided it wants to buy the part of the business it does not already own. And as a result, we see the stock up by more than 6%. That was something we certainly were reporting on as likely to happen last week here at Bloomberg. Here's the euro, up by 1%. We're going to hear from Christine Lagarde. She'll speak to Bloomberg exclusively tomorrow. And in the run-up to that, she's been saying today that she sees the end of negative interest rates by September. So we're at minus 50 right now from the ECB. So that means, what, 25 in July, 25 again in September, takes us up to 0. And the euro likes that, up by, as I say, over 1%. Keep an eye on the pound as well, because this is a broad dollar weakness story, as we were discussing with our colleague Noura Lally from the Markets Live blog as well. Keep an eye on the politics here in the UK on the pound as well. Kaylee.
All right, Anna, well, let's return to the stock story here in the U.S. because, of course, as we mentioned, the S&P 500 on Friday narrowly avoiding plunging into a bear market on a closing basis. But Morgan Stanley's Mike Wilson says it's too early to turn optimistic on stocks, writing in a note today, quote, equity clients are bearish, a necessary condition for a sustainable low, but an insufficient one. Given the risks to growth are just emerging, it is too early to get bullish. Joining us now is Steen Jacobsen, Saxo Bank CIO. Steen, what do you think? How bullish or bearish are you feeling this morning?
Well, I have the same base position I've had since November with the Fed pivot that we saw, and that is that we need to be defensive. We are nowhere close to a panic in the market. We're starting to see some hedge fund fail. We're starting to see momentum going out, and clearly the market is impacted by this fact that a lot of the constituents of the high-flying stock has been basically a zero coupon 35-year bond. So the convexity is now biting them. And as Mr. Wilson says, basically we haven't even started the quantitative tightening. That will happen in June. So for me, it's more of the same. The script has been the same for the last 7 weeks. But in essence, this is all about the major central banks is now kind of indicating that we will see no liquidity provision and inflation remains priority 1, 2, 3, and all the way through to number 50 priority.
Well, as you say, Steen, you've held these views for quite some time. And I was looking back to one of your previous times that you joined us on this program when you had just put out your 10 outrageous predictions for 2022 at the tail end of 2021. Among them, the plan to end fossil fuels gets a rain check. Of course, we've seen a pivot back to fossil fuels given the war in Ukraine. Another one on here, U.S. inflation reaches above 15% on a wage price spiral. Of course, we're not at 15 yet, but we do have an 11 handle on PPI. Steen, are you surprised about how more right than wrong you were on some of these things?
Well, of course, as you know, they are called outrageous predictions for a reason, and the 15% is entirely picked because that was the peak back in the 1980s. But I'm not surprised at the underlying inflation. What I'm surprised about is that the market continues to feel that it needs to trade peak inflation at all times. Any show I go on, any interview I do, any clients I talk to, the first question is this peak inflation? And I have to tell them, well, when the fundamental change of why we have inflation, then inflation will have peaked. We have done absolutely nothing in that energy transmission. We have done absolutely nothing in terms of doing anything on the monetary tightening. And above everything else, we are now moving into a phase where we have to pay the price for the excess liquidity that's been in the system.
Okay, and yet you say the economic agenda is moving to a better and more rational place, Steen. Is that because, that's because you like that we're heading towards a slightly, maybe higher interest rate environment? Or give us the context between that. What looks so bright to you?
Exactly, Anna. So my premise is that when you have negative real rates, it's really equal to that you have no productivity going into the future. So when you have an increase in price discovery from the market itself, and on top of that, that you start to move into positive real rates or even just moving the needle to zero, what you're then having is that the market needs to find higher relative return on the capital invested. The freebies, the ability to just be rentiers and basically taking rental income is disappearing, and we need to move an agenda which is entirely built on productivity. So what we as market players tend to forget is that at the end of the day, the only thing that keeps an economy growing is productivity. Productivity can almost entirely only happen when you have a positive real yield, because a negative real yield is basically saying to you something like green transformation can only happen if you subsidize it by keeping interest rate too low. So yes, Anna, very positive that this is bringing the rooster home to right now.
Okay, so you think that that's positive then in terms of what it means for productivity, Steen. What about what we're going to see on the fiscal side? We've seen some governments in Europe talking about more defense spending as a result of war in Europe. How substantial is that going to be? How substantial a driver is that for Europe's economy?
It's big, and I think if anyone wants to draw and look at productivity, just to look at what happened to European productivity since the Berlin Wall came down in '89. of course, the Berlin Wall also was the peak of military spending because of the former so-called Cold War. And what we've done over the past many decades is that we have kept military spending very low. But what we forget there, of course, is that the military expenditure and fiscal spending actually very often have a very private spillover effect. It's the private sector that drives this. It's the private sector that benefits from some of the innovation that happens in that space. And the most important military expenditure you can have right now is telecommunication, the ability to navigate the internet, and certainly also communication overall. So yes, Anna, I actually am one of the few people who thinks that defense is not only ESG compliant because it maintains our constitutional right and our democracy, but is also from a capital allocation perspective, very, very efficient use of capital because the private system simply cannot do research and development. They get too over-focused on buybacks and paying out dividends.
You mentioned, we're talking about defense here, but defense is not the only major export of, say, even the United States. You're looking at commodities, you're looking at, of course, technology as well. I have to ask and put all this into the context of a dollar that has been strengthening. Of course, today it is much, much weaker, but I'm curious about the ripple effects of the dollar as we talk about this inflationary period and as our former guest talked about other central banks finally catching up to what the Federal Reserve is doing.
Yeah, so, if you only had one indicator for the liquidity in the world, it would be the strength of the dollar. So right now, we've just coming off a peak high dollar, which indicate that the liquidity is tightening globally. What then translate into the emerging market and non-US is that the euro-dollar market, so the dollar that is traded outside the US, gets too expensive relatively. It slows like the global demand, and then ultimately it drives the US dollar down because the only way this system can reset is a lower dollar. So sometime in the next 3 to 6 months, we'll probably reach the peak rate in terms of interest rate. And then the only thing left in terms of attracting capital to the US is a weaker dollar. So this is probably not the 9th inning, but it's certainly the 7th or the 8th inning we're in terms of the dollar strength, simply because we are reaching and getting very close to what is the terminal rate that the US economy can sustain with the amount of debt it has right now.
So we're in the 7th or 8th inning. We're not yet at the 9th. Does that mean that there might be broader implications, for example, a sort of debt crisis when it comes to a lot of these emerging markets? The IMF director, Kristalina Georgieva, has notably warned about a sovereign debt crisis of some sort among these emerging market countries. We've seen it with Sri Lanka, for example. Do you see something like that before you start to see that pullback in the dollar?
Yeah, and we're already seeing it, as you indicate. Sri Lanka has had to default. We have Pakistan, Egypt, and a number of other countries already applying for additional help being issued from the IMF, which is on the record. So yes, it is happening, and we also have a food crisis incoming. And don't forget, the amount of people who live in poverty right now is increasing almost daily by millions of people due to this inflated food prices, but also the energy prices that sits very centered to why the food prices are higher. So yes, we unfortunately have to move to sort of the final stage, the panic, the reset of the system before we move to what we just discussed in terms of productivity and a market that can see a bottom coming up.
Steen, Kriti there was just talking about the emerging markets. Where regionally do you want to be allocated right now?
I like China. I think China is, of course, seems to be extending the lockdown, but anyone who observes China will know that when President Xi walks out on the stage in September or October, they will start one of the biggest fiscal impulses in human history, simply because they have lost not only the first quarter, but also now the second term in growth. And the only way a system like the Chinese can re-engineer itself is to spend fiscally. So there's another goal similar to what we saw in 7 and 8 that will catapult, of course, commodity prices higher globally, and it will certainly make sure that inflation stays way above the level that Fed and ECB is still dreaming, hoping, and wanting to see next year.
Okay, Steen, what will happen then if China does spend fiscally, as you suggest, but that policy kind of works in the opposite direction from the COVID zero policy, which is obviously weighing on the Chinese economy?
So, the Chinese economy needs help in many shapes and form. At the center of the Chinese system, the center of any planned system, sits the banking system. So the banking system will need to get a higher margin. This banking system needs to be lending out. And as such, that will elevate and float all boats in the system. But don't forget, Anna, and you know this, the Chinese equity market is not an equity market in the US with a multitude of different agents in it. It's really lack of a better word, it's a speculative conservative, one-dimensional market. When the Chinese authority tells you that the market has reached a bottom, it's reached the bottom, and then it starts to move up. And I think if you look on a relative basis, the technology names in China is now very, very cheap, and most of the names in China is down more than 50%. So from a value perspective, in terms of the emerging market exposure I want, that China is definitely my number one uptake in terms of doing the risk allocation here. But again, as you know, Anna, I'm a very defensive mode right now, and I continue to play a multi-asset strategy, which is long volatility, long the convexity that is ongoing in terms of the interest rate right now.
All right, Steen Jacobsen, Saxo Bank CIO, thank you so much for joining us and giving us some of your insight this morning. Let's turn our eyes now back to Davos, Switzerland. Ukrainian President Vladimir Zelensky is currently delivering a virtual address at the World Economic Forum. He is urging more sanctions against Russia, including specifically Russian IT companies, and reiterating his call for sanctions against Russian oil. He also invited companies that leave Russia to Ukraine and says that Ukraine needs more weapons and financing. It looks like Vladimir Zelensky has just wrapped up his remarks, but of course we will continue to monitor all of the happenings and interviews at that World Economic Forum in Davos, Switzerland throughout the day. This is Bloomberg.
What is your dream? How do you see Ukraine in the future? What is your vision for Ukraine in the future?
Thank you for this question. A complex yet simple one, a philosophical one, and very specific one. Just to be frank, I'm myself being the president of a state at war. We already are thinking, what is the Ukraine of today? Because every morning starts for me with getting the number of people who were killed in the past 24 hours. Unfortunately, according to the statistics, we've got 87 dead bodies, 87 victims today in this number.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
The This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Kriti Gupta and Kaylee Lyons over in New York. Now back to Davos, where executives, politicians and central bankers are all meeting over the next 4 days at the first in-person World Economic Forum in 2 years. Credit Suisse CEO spoke to Bloomberg's Francine Lacqua about the global economy.
With the high inflation shocks that we see now in certain areas of this world, it's very clear that people are somewhat insecure. They are in risk-off mode. But our house view still is that there won't be a recession, neither this year nor next year. There will be a slowdown. I think our house view global GDP is 3.3% for this year and 2.9% for next year. They have come down. And if you look at certain markets, whether it's equity markets or high yield markets, they have clearly come under pressure.
I mean, under pressure, they've been a bit crazy.
Yeah, well, they're basically been pretty quiet, let's put it this way. But our clients, they don't panic. You know, they are looking at how things develop. And they stay engaged, and that's very important for our wealth management clients and our wealth management relationship managers, that they stay in front of the clients, and that's what I'm really focused on.
So there's no, you're not seeing any outflows, they're still fully invested?
Well, what we did see, like many of our competitors, is some deleveraging as part of, you know, assets under management going down, certain equity prices going down, but some deleveraging, especially in Asia. Obviously, with what happened in Russia and in some other parts, that AUM have gone down, but no outflows as such. No.
Does it actually hurt your ability to collect some of the fees in certain parts of the markets with some of your wealthy clients, or not so much?
Well, if you look at our three revenue streams, so net interest has come under pressure because we had lower lending volumes. But now with interest rates going up, that should be a positive element going forward. Recurring revenues have also come down because of lower AUMs. And transactional revenues actually have started to stabilize now. Volatility sometimes is a good thing for transactional revenues, so have started to pick up. But it's clear that 2022 will be at lower levels than last year.
That was the Credit Suisse CEO Thomas Gottstein speaking to Bloomberg's Francine Lacqua in Davos. It was delayed, so no snow because of the time of year, but you still get helicopters. Apologies for the noise of the helicopters at the start of that interview. More Davos when we return. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
can ESA help humanity take its next giant leap?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta with Kaylee Lyons in New York and Anna Edwards in London. Matt Miller is off today. And Anna, usually at about this time, we go to Tom Keene with his single best chart. But given that he is on the not so snowy hills of Davos, I thought I'd take over and throw in my chart of the day here. And I really wanted to put that bear market that we're looking at in context when it comes to the S&P 500. So for our radio audience, stick with me here. We're looking at the peak to trough drawdown so far that we've seen in the S&P 500. So we know that it hit an intraday bear market territory yesterday, but if you go all the way back to 1929 and put this into some perspective, the biggest sell-offs when it comes to recessions, when it comes to inflation, stagflation, have actually been 40% drops. Look at it in 1972, in 2001, even in 2008, and you aren't seeing that. This current drop looks a little bit more like 1987 Black Monday panic, or 1962 the Kennedy slide, ending with the Cuban Missile Crisis. So Anna, I don't want to say this isn't that bad, because it is. There is some extreme selling pressure, but put this into history, and it looks like this is more of one of the more muted times in history we're seeing that bear market.
Yeah, and I don't know if that comes as a comfort for those who are long at the markets, or whether it makes people think, oh, there's more to come, and we'll watch for how much we get from here. And Kriti, thinking about that, there are plenty of events taking place, data releases, speakers this week that could act as catalysts in either direction for these markets. We have the Fed's Bostic and George speaking, the Bank of England's Bailey speaking today. And in terms of the data, we get PMIs from a whole host of countries tomorrow, which is going to be really important as we've seen this pivot in market thinking away from, of course, the focus on inflation. We won't lose sight of that, but also adding in a focus on growth.
Yeah, there's so many other cross-asset pictures to look at too. The commodity story, the dollar story, even the bond story, all of which are ultimately going to reflect in what happens to the stock market.
Yeah, absolutely. And later on this week, we'll get, of course, a lot of retailers reporting their results. And we all remember what we learned about the strength or lack of strength of the US retail customer last week. So certainly a big focus on retail names once again. That is it for Early Edition. Surveillance is up ahead. Lots more coming to you from the slopes of Davos. They'll be speaking to Joseph Stiglitz, amongst others. This is Bloomberg.
city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
There's a pervasive fog of negative sentiment out there.
When every single headline is negative, it's time to buy.
I still think the dollar is going to be king in this sort of environment.
So the earnings are super powerful and stocks are cheap at this point.
The bond and the stock market are trading as one.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Thrilled you are with us from the World Economic Forum meetings in a very different Davos, Switzerland. We're going to get right to it. A great set of guests coming up. Lisa will tell you about that, but we need to set the stage in May of what always occurs in January. I'm stunned how jarring it is. I did not expect it to be so odd this year.
Well, not only is it not snowing and it's not freezing, but definitely the quiet tone to the meetings.
Somber,
people somber. And I think that that's appropriate. And when we're just coming off the worst rout or the longest stretch of declines on the S&P and the NASDAQ going back to 2001 for the Dow to 1923, although evidently nobody looks at it if John were here. How do you then spin forward a narrative of optimism amid such deafening pessimism right now?
John Farrow on assignment, Capri, the World Economic Forum meetings where there's no wind. We've got a really nice hurricane here like Hurricane Petra of a couple years ago in Switzerland. We're going to put up with the wind and also look at the winds of change in this economy. Klaus Schwab's front page of the World Economic Forum, Lisa, by far the most serious, somber I've ever seen.
How can they project optimism when we possibly are facing a downturn? We did see that the head of the IMF came out and said she does not see recession as inevitable. President Biden sounding a similar tone. How much is this just the inevitable optimism they have to portray rather than something that is true, especially given the sort of high food prices and the inflation that really is crippling the middle class?
12 noon with the bells of the church behind us up this valley. It's a smaller audience than normal, but not that much smaller. I would point out the first observation of this Davos is it's definitely less corporate. There's less visible branding of the modern Davos. It's much more like a 2008 or even earlier than that Davos. And behind that is market stability today. Let's go through the data real quickly here. Green on the screen, yields up about 3 basis points. Even the dollar comes in a little bit.
Yeah, and what we see is actually euro strength today, especially as ECB president.
Almost a 107.
Christine Lagarde coming out and seeing positive rates, or the end of negative rates, I should say, by the end of September, really pushing forward this idea of trying to tighten into what they see as huge inflationary pressures. We're going to speak to a whole host of amazing people today, including Jason Furman, who is a professor at Harvard. We're also going to be speaking with Ricardo Hausman, who is also of Harvard, but could have been president of Venezuela. He'll have a fascinating view.
Or could one day be president of Venezuela.
Exactly.
The founder of this phrase, original sin. There's a lot to talk about there on the economics of the moment.
Yeah, we're also going to be speaking with Rebecca Patterson, chief investment strategist at Bridgewater, how they see possibly more pain in big tech, with yields possibly climbing to 4% on the 10-year. And John Kerry, U.S. Special Climate Envoy and former U.S. Secretary of State, joining us at a pivotal moment for him and, frankly, as you've pointed out, Tom, for the Democratic Party as well, especially given some of the walk back we heard this morning from the White House.
I was with Senator Kerry, and he will always be for me the senator from Massachusetts, but I was with John Kerry at the last real Davos with Bank of America, and he was prodigious on global warming. And one of the themes here, they really don't want to talk about it, but with Newcastle coal in Australia to the moon, global warming has taken a back seat, climate change.
How do you then parlay some kind of ESG agenda at a moment where suddenly getting as much oil and gas as possible is what's in vogue?
Over the next 4 days, we're going to do a lot on economics, on international relations, but we cannot ignore the market turmoil. We start strong with Margie Patel, Senior Portfolio Manager, Allspring Global Investments, who has seen this before. Margie, thank you so much for joining us on short notice. What is different this time about a record pullback in bonds, price down, yield up?
Yes, that's right. And actually, there hasn't been any place to hide as far as a safe haven. If you look at corporate bonds, investment grade, junk bonds, even treasuries, everything is down about 10 to 12% total rate of return. So almost to some of the better equity sectors. So it's really been no place to hide so far.
How do you get optimism amid the stomach-churning volatility that you have been seeing, Margie?
Well, I think what's happened is the Fed, having been sort of comatose when rates were low, the danger signals are starting, has now talked very, very tough about aggressively raising rates, aggressively selling down their portfolio, and it's really scared the market to death. They've only made 75 basis points of rate increases in the short end, but if you look along the curve, bonds are up in yield 120 to 150 or 60 basis points, so the market has raced ahead of the Fed, anticipating the Fed to be very aggressive in their action. That's starting to roll over into the real economy and certainly into the equity market.
Margie, there is a belief in markets that is pervasive that the Fed will step in at some point, that they will take notice of the carnage in some of these equities, and they will actually stop some of their hiking. You are one of those people who does believe that, but we have seen no signs of it. What gives you such confidence on that front?
I think reality will awaken them. I think they've been maybe a little bit too attuned to Wall Street saying we need much higher rates and ignoring what's going on in the real economy as far as consumer inflation, signs that we're actually seeing employment start to roll over. And those are worrying signs, and I think the Fed will see them. Typically, they lag the reality of the market, but hopefully they will see that they're beginning to do damage to the real economy, which is in pretty good shape. The excesses have really been in the zero interest rate part of the market, the equity market, the housing market, other real asset markets.
Margie, I want to talk about coupon right now. The coupon has changed. The yield to maturity has changed. For our audience on radio and TV, what they're gambling on is I'm getting a higher yield now, no question about that, but I'm worried about price decline. How do you balance the greed of grabbing that higher yield versus the fear of bonds continuing south?
Well, I think we're very near the peak in interest rates, frankly, because of I think the economic centers are going to be beginning to roll over, and the Fed will stop what they're doing. And really, when you look at high-yield bonds yielding 6.5% to 8.5%, trading at 90 cents on the dollar, for a longer-term investor, meaning a year or more, that looks like a pretty reasonable risk-return alternative. Frankly, it may do as well as the equity market, which we think will just be mid-single-digit to low double-digit.
So to be clear here, and let's be clear, Margie Patel has claimed worldwide, folks, for a truly balanced outlook on equities and bonds. Did I just hear you say bigger appetite for yield and longer duration yield versus buying a dividend growth story?
Well, I think there's always going to be more money to be made in equities over the long term. But over the, say, the next year or so, especially if you're interested in income, not capital appreciation, corporate bonds, especially high yield, I think are really pretty attractive on a risk-reward basis.
Margie, what do you have to see in order to actually achieve this in terms of a downturn? A lot of people baking in a recession. We are seeing that certainly baked into a lot of valuations. You're basically suggesting that's off the table and high yield is still the place to hide.
Well, I'm assuming that is a big risk, that the Fed doesn't get the markets, the real economy signals, and keep marching along with a very aggressive tightening program. But if they look at the real world out there, I think they'll see it's time to take a big pause. And I think at that point, we will more or less evaluate the market and perhaps be able to see a way through without a recession. If the Fed keeps doing what they're doing, we may very well have a recession at the end of this year or in 23, precipitated by their actions, as well as global weakening. There's a lot of negative things going around in the world away from the U.S. that could really drag the U.S. market down from here. So I hope the Fed will look around before they get too aggressive.
Margie, why haven't we seen more substantial outflows, in particular from bonds? We have seen some, but why hasn't there been a stampede away from an instrument that should be full faith and credit and should be rock solid?
I think one of the reasons is because if you look at the yield on money markets, it's still very, very low, so it really isn't a competitive place to hide. It's not as if you could get 3 or 4% in money markets and say, fine, I'll stay there. You're still looking at best something maybe approaching 25 basis points. So I think people are inclined to say, we've seen this volatility before, we're going to stay where we are. Or those people who've gotten obliterated in some of those equity names that have blown up or maybe don't have anything left to sell or just sort of frozen, not sure what to do in this market.
Margaret Patel, thank you so much for getting us started here in Davos. Margaret Patel, of course, of Allspring Global Investments. And Lisa, what is so important here and so far unspoken is all the muckety-mucks up Happy Valley are linked into long-term Margaret Patel-like institutional money. And frankly, in the bond space, it's worse than 2009 right now. Right. I can't believe I'm saying that, folks, but it is.
Well, and that's actually what Rick Reeder of BlackRock said. There was a Wall Street Journal article, and he was quoted as saying his stomach is churning and that these are some of the worst price swings and most volatility that he has seen in his 30-year career. And a lot of people pushed back and said, what about 2020 in March? What about 2009 and 2008? And the reality is, Tom, this is unheard of. The 60-40 has gotten decimated. The worst year ever so far for this type of portfolio. Right. How do you readjust?
My stomach's churning too after the third bowl of barley soup, which is great. Thank you, Hotel Parson, for the best food going. You got to explain to our listeners, and this, I mean, this is an American thing. The American fixation 2 decades ago of Heidi Abramowitz, Girl of the Alps, was extraordinary. Explain the fixation to our international audience of the Heidi of like 30 years ago.
I'm so glad that we have less than a minute for this. Yes, I was obsessed with Heidi. I read it. It was the first chapter book that I read, and the hills are alive with the sound of music and the flowers, and it's beautiful, and stay happily over there with the bell around its neck. And you hear it, it's great, it's beautiful. And you know what? I'm not doing this again.
And Heidi ended up in Zurich and went goth, right? That's what I thought.
Yeah, hi, Ed.
Here's what we're going to do. We're going to keep the markets abreast. Rebecca Patterson to join us later from Bridgewater. That'll be important. But we begin to look at the new theory of Davos amid the fears in economics and particularly the market turmoil. We need a course in Ec 10 getting us started here at the World Economic Forum on the themes of the moment. Jason Furman joins us from Harvard. Please stay with us from the World Economic Forum.
Keeping you up to date with news from around the world with the first word, I'm Rishika Gupta. The White House is now walking back President Biden's comments on Taiwan. In Tokyo, the president said the U.S. military would intervene to defend Taiwan in any attack from China that appeared to break the long-standing U.S. policy of so-called strategic ambiguity. The White House later said the president simply meant the U.S. would provide military equipment to Taiwan, not sending troops. And the Biden administration announced that a dozen Indo-Pacific countries will join the U.S. in a sweeping economic initiative. The goal is to counter China's influence in the region. Australia, India, Japan, South Korea, and New Zealand are included, along with 7 Southeast Asian countries. But the new framework doesn't include any tariff reductions, and it's unclear which parts are binding. In Australia, the Labour Party's Anthony Albanese has been sworn in as Prime Minister. He defeated former Prime Minister Scott Morrison in an election held on Saturday. He's promising swift action on climate change, greater gender equality, and improved wage growth. And British Prime Minister Boris Johnson is preparing for another dressing down over illegal parties in Downing Street. Civil servant Sue Gray is expected to publish her internal investigation into the details of the so-called Partygate scandal this week. It may include potentially damaging photographs. Johnson has committed to making a statement in Parliament on the matter. Bloomberg's learned that chipmaker Broadcom is in talks to acquire cloud computing company VMware in what would be a massive deal. VMware currently has a market valuation of about $40 billion. An acquisition will put Broadcom into a highly specialized area of software. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
A lot's happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Your view is a recession in the United States inevitable? No. Why not? Our GDP is going to grow faster than China's for the first time in 40 years. Now, does that mean we don't have problems? We do. We have problems that the rest of the world has. but less consequential than the rest of the world has them because of our internal growth and strength.
The President of the United States saying, no, we're not going to have a recession. You almost fell off your chair.
Okay, so he's saying it's not inevitable. What else is he going to say?
What else is he going to say?
Yeah, it's inevitable. We're just doomed, you know?
The President on a successful reset in the Pacific Rim, we thank Robert Hormats, who was just wonderful about a week ago, giving us perspective on our fractured Pacific Rim relationships, and the President is over there trying to begin to piece it back together. We welcome all of you in May in Davos, not January. It is spectacular. I vote immediately they should move the meetings to June.
I think that a lot of people would.
Third week, fourth week of June. Sounds good to me. Let's get started now at these World Economic Forum meetings with someone who can synthesize it together. Jason Furman, he's professor at Harvard Kennedy School, former chairman of the U.S. Council of Economic Advisors. What he does more than anyone in this nation is stand up in front of bright cherubs and teach them their first course in economics at Harvard. He is the one who has followed on from Mankiw and Martin Feldstein to deliver what's called Act 10. What did you say in the first week of May to the eager students who've never seen a bond market like this and never seen the second derivative moves that we're seeing in markets as it relates to our economy?
Well, to my students, I told them that when the price goes down, the yield goes up.
Good. We have an opening, right? Where do we need somebody hired?
I think your viewers are probably on top of that one already. What I'm not sure your viewers are on top of is that I think this inflation is going to be pretty persistent, not where it is now, but way above where the Fed wants it to be. That means the Fed's going to need to stay at it. A Fed funds rate of 4% or higher, completely plausible, not at all priced into the market right now.
Because a lot of people, like Marky Patel, who was just on, believes that the Federal Reserve will come out and they will rescue the markets. And you're saying, no way. Why?
Because we are way above our inflation target. That is the job the Fed was assigned. You have a chair who talks about himself in the sort of wake of Paul Volcker and that historical shadow. He wants to bring that inflation down. Right now, the market is helping him do his job. I think this is not an accident. This is almost something that they are fine with.
We were laughing. We shouldn't have been laughing completely because the prospect of a recession is horrendous. Do you think it's avoidable, as Joe Biden said, or do you think the Fed, frankly, has to essentially allow that to happen to cool the inflation as it is?
You know, over the next year, I'm not that worried. I mean, I'm always at 15% for a recession. Maybe I'm at 20% now for the next year, but not much higher. Consumers are still spending a lot. There's people coming off the sidelines for jobs. There's more inventory rebuilding to be done. When you look after this year, that's when I get more worried. That's when more of the Fed rate hikes start to kick in and affecting the economy.
Jason, the punditry out there right now, I've never seen. It's worse than 2009. Those pundits are silent when they listen to you. Within the geometry of where we are, when we get interest rates to slam like they are, when you give us the fear of a terminal rate to 4%, how does that link in to the actuarial assumption of bonds and separately the total return of equities?
Yeah, I think that the long bonds haven't fully priced in that, you know, they think the Fed's going to stop at 3%. That might happen. We might hit a recession and they go back to zero, but that we could be at 4, well above 4. I think that's the modal scenario. When you look at something like the long yields, those just haven't gone up the same way they have on the front end of the curve.
Let's go up Benjamin Friedman, the giant of Harvard economics. Let's look back to the Napoleonic Wars or the Panic of 1870, the gyrations out of World War I, a fractured Europe and all. That's the arch fear that's out there for truly a generation or two that have not enjoyed what we're in right now. What does it do to a portfolio? What does it do to a pension fund?
Yeah, I mean, that interest rate shows up in every single stock price as on the discount factor. That's why, you know, almost every single stock price is going down right now.
Are you in the triple leveraged all cash fund like me?
Are you trying to pitch that? Is that what you're going?
No, well, they want me to start either an ETF or an NFT.
I'm sure.
I can't remember which.
ETF or NFT. I can imagine
Jason,
with your face on it.
The fear here, Jason, is if we get a further first and second derivative move that we've all enjoyed for 4 months, that we're going to get a true negative 35% Dow. We're going to get bonds like we've never seen back to, say, the 30s. Do you ascribe to that?
I think that's a possibility. Look, I focus more on the real economy. I look at households that have $2.3 trillion still saved up from all the transfers they got over the last 2 years. I look at businesses who still are facing pretty good financing if they want to make more investments. I look at a global environment where the dollar's strength is worrying me, and the downdraft we're getting on net exports. So I'm looking at those factors. Overall, I think we're going to see a lot of jobs this year.
So there are some people who believe that the more we see a momentum and a lack of recession now, the worse it will be later. And they point to people levering up on the consumer side once again in order to fuel their purchases even at higher prices. Do you agree?
I think that's possible. It really depends. The Fed thinks inflation's coming down to 2.5%. If that happens, and there's sort of a 25% chance it happens, that'll be wonderful. We can avoid all these things. If inflation stays stuck at 4.5%, 5%, and that's roughly where the underlying inflation rate is right now, I don't know what sort of pain you'd need if you want to bring it back down.
1 minute. Long ago and far away, a Columbia professor saw a kid at Harvard and he said, "This kid's different. He's going to work with me." How dead on was your mentor, Joe Stiglitz, on globalization and his discontents? It's shocking.
I saw Joe. Joe doesn't love globalization, but Joe likes it here in Davos. I think we're seeing a pause in globalization. I think we're seeing a plateau. Don't think we're going to see that big a retrenchment because there are so many efficiency gains from operating all over the world. We'll see some recalibration, but I don't think there's going to be a big withdrawal from it, and I don't think there should be.
And the agreement that we have, folks, just so you understand this, is I get to choose one guest. So we have the optimism of Jason Furman, and you chose Stiglitz that we have in the next hour.
Yeah, Stiglitz will be coming up, and he'll be countering. We heard that you like globalization here at Davos. That was what Jason Furman told us, and we'll see what he responds.
Don't get me in trouble.
Professor Furman, thank you so much for Act 10 to get us started here in Davos. What are the markets doing?
The markets, well, we had a little bit of a lift.
I thought your people talked to you and told you what we're doing.
I'll say, look, we're seeing right now. The S&P is now 39.24, up 25. So you do have a little bit of a lift. A little bit, perhaps people trying to take a breath after the longest streak of losses going back to 2001.
Nicely said. 10-year yield, 2.82%. We've got so much more coming up. Rebecca Patterson to be with us. And also, I'm really looking forward to this. Dr. Thin, Wing Thin of Brown Brothers Harriman will join us on Mr. Biden's Pacific Rim. Stay with us from Davos. Good morning. On radio, on television.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. And the place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question. It's a great question.
Great question.
Great question.
Great question. Great question.
That's going to be the best question I get all night. I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
Good morning, everyone. From the meetings of the World Economic Forum in Davos, Switzerland, as we've said many times, so different this year. Much talk, of course, of the war in Ukraine, and much talk about deglobalization. Lisa Abramowitz with me, John Farrow on assignment in Capri. Help me with this word deglobalization. How do you translate that?
Right now, you're seeing the greatest number of mentions of deglobalizations in more than a decade. If you look at some of the transcripts of companies, and basically they're coming out and trying to not just deglobalize, but change where they have their supply chains, make them more local. Just-in-time delivery is so important at a time when there just is too much more money.
Like your hairspray is resilient.
My hairspray is not resilient for the film. We didn't even go to the film, which is the incredible. Yeah, he does an incredible
Swiss
accent.
win. It's a.
Oh dear Lord. Honestly, I think that this is going to be one of the key questions.
Yeah.
How do you rearrange supply chains in a world where suddenly we are more dependent than ever on one another? What happens if suddenly we can't get chips from Taiwan? All of a sudden, those iPhones become a lot more challenging.
Chips are front and center, but it's way more than chips, as the president knows on his swings through northern Asia. Right now, we're going to rip up the script, and we're honored to do this with Win Thin. Dr. Thin is global head of currency strategy at Brown Brothers Harriman, but far more than that, from his native Burma, he is someone just viscerally entwined, with the Pacific Rim. Win Thin, thank you so much for joining. Robert D. Kaplan talks about the South China Sea, and he walks around it in a circle, chapter by chapter, and he talks of the change there in China. What does President Biden need to do economically? What does President Biden need to do politically to restore America's relationship with the Pacific Rim?
Well, first of all, thanks for having me. It's always a pleasure to be here with you two, and also Jonathan. I will say this: we had a bunch of comments out of President Biden today, and many of them centered on China. Obviously, the most important thing is this new Asian partnership that he announced. In a sense, China's been on the back burner really since Mr. Biden came in, and rightfully so. He's had to struggle with the fight with the pandemic and struggle with the recovery. But China seems to be circling back onto the front burner. So this new partnership with I believe 10 nations in Asia, I think to me is sort of a pivot back to sort of the Trans-Pacific Partnership that was torn up, I think, by the previous administration, and it's a way to sort of reassert the U.S. Interest in the region. And again, it's a pretty big signal to China that, hey, we're still keeping an eye on you. We are still hoping to sort of provide a counterweight to your influence in the region. And so I think it's a big deal. I think obviously the details have to be worked out still, but I think it's a big statement from President Biden.
Okay, when I came in, I read a bunch of headlines. The first headline being that President Biden actually came out and said that the U.S. would defend Taiwan. A lot of people view this as a complete upheaval of his position. It was walked back subsequently. And then he talked about possibly, or his administration, removing some of the tariffs on China. That seems to be what has been driving the yuan gaining today versus the dollar, and some of the optimism that we're seeing. Not as much, perhaps, the arrangement that we really don't know many details about. How do you view the idea of the removal of Trump-era tariffs?
Well, it's certainly eye-opening. It's something that I think has been quietly, I guess, dissuaded in the past. But obviously, we're in this new normal where inflation is much higher than anyone expected, and so officials are looking for ways to ease the pain for the U.S. consumers. So, to me, it's always been a sort of a nice point of leverage that was gifted to President Biden. That is, President Trump imposed the tariffs. He took this very tough line against China, and it sort of handed these tariffs over to the U.S. And it's always been, I think, a good point of leverage for the U.S. to maintain. So my guess would be if they are discussing some sort of a relief, tariff relief, it would be on a temporary basis. That is, I don't think the U.S. policymakers want to give up that point of leverage. They may have a maybe 6-month window, maybe a bit more, given how the supply chains are. So I don't think it's going to be something like all of a sudden everyone's buddy-buddy again. I do think that that the U.S.-China relationship remains contentious and will remain contentious going forward. In terms of the yuan gains, I think a lot of it's just driven by wider dollar sell-off, dollar weakness. It's down against pretty much every major currency and every emerging market currency today. And I think it's sort of the pendulum of sentiment, as you know, in the FX market, the pendulum of sentiment swings very wildly. And right now it's swinging sort of well, I won't say anti, but it's sort of, I guess, risks of U.S. recession are being priced in. It's sort of a less hawkish Fed. So again, I think this pendulum will swing back eventually, but for now, I think the dollar's on its back foot.
So when the pendulum of doom that has been really pervasive has shifted a little bit to the pendulum of something that is a little bit different, at least for the past couple of trading sessions. But when you talk to clients, can they get any conviction around the yuan about going back into China after massive outflows, given this contentious relationship of which you speak?
Yes. I mean, the whole China story has been complicated, not just by the economics, but by the politics. As you know, the COVID zero has wreaked havoc on the Chinese economy. I think it's going to be impossible for them to meet their 5.5% or about 5.5% growth target for this year. So from a fundamental story, it's hard to argue for going back into China at this point. And politically, while they're still cracking down on tech companies, there's this sort of shared prosperity theme that President Xi is pushing. So to me, there's a lot of reasons to stay out of China, at least for now. I know there's some smart people out there who are trying to pick the bottom, but I think it's very dangerous right now. I think,
interesting. Again,
given how this sort of the U.S.-China relationship is back in the headlines, it's going to make I think investors very uneasy.
When I was talking with our Simon Kennedy about the linkage here of markets and all we're talking about in Davos, and particularly in the great economic call. And as you know, the global litmus paper is the dollar and the dollar system, the floating rate system that we have. Can we have market stability with a resilient dollar, or does it destabilize so many emerging markets? Does it destabilize flows so much that we're just not going to get to a solid market outcome without weak dollar?
Well, Tom, that's a great question, because as you probably know, there's been some chatter in the last week or two about some sort of Plaza Accord to help weaken the dollar. Now, I think to me, in FX, a lot of it's really about the pace as opposed to level. And it's if the pace is very fast, that's where the risk of destabilizing moves happen. To me, if you look back to mid-80s, we had a dollar move of somewhere around 30, 40, 45%. And we're nowhere near close to that at this point. So, it's something I think, Tom, that needs to be monitored, but I don't think it's setting off the alarm bells yet at the G7. Markets, we're dealing with an unprecedented global removal of global liquidity, and that's, I think, the more important sort of global driver.
Right. But this is so important, and this comes up with all sorts of good work, including the two Redekers writing in Foreign Affairs. In